Good morning. Give me just a second here. My own Twitter. Tesla today. Or Google maybe. Good morning. How's everybody doing out there? We've got Jerome Powell back on again this morning at 11 or 10 a.m. You guys hear me out there? Check one. It seems like I got you out there. Check two, check two, check two. Okay, there we go. The HYG left. HYG just left a huge gap on the opening bell this morning. Dixie looking bullish as well. It's got a bull cross coming on it. NASDAQ had a gap that it left on the opening bell this morning on the 15-minute. I've got NASDAQ on the 15 minutes specifically here. You saw, remember yesterday that it did not recover off of that. That was where the trap was on SPA yesterday. If you remember that when we were sitting up in here, we had said there was a potential bull trap up in here, and they teed right off on this on the close yesterday. Came right down here. We had some nice selling in the overnight, but of course you saw some of that recovery into this opening bell this morning. I was kind of fascinated. I was slightly fascinated yesterday. I read some of the articles that came out. Can you guys hear me? All right, good. So I was kind of fascinated reading the recap of Jerome yesterday when he was speaking yesterday, and we saw him say, "I never said pause." I was kind of dumbfounded, and I was dumbfounded as to the. I wasn't dumbfounded by what he said. I was dumbfounded by how it was reported in the news yesterday, because I'm like, wait a minute, we gotta pause. I'm like, we gotta fucking pause. There's no rate increase, right? And he also said that we were getting 2 rate hikes in the future. This is at the last rate hike meeting. Rate decision. So I was kind of scratching my head there as to how what the perception was, or that perception, but how it was reported yesterday. I was kind of just scratching my head, and we knew also previously that he needed to come out with needed to come out with when he was pausing on the rate decision, that when he had his presser that he had to come out swinging, right? This is not a pause. You're getting more rate increases in the future. And we also know that as long as we get rate increases in the future, it's bullish for the stock market. You don't usually at this point in the process see the last capitulation phase of the market. You have some of you guys know this, some of you guys don't. You have distribution down, right? Then there's a bottom, there's a trough. Then we go back down one more time and test it before it goes like this, actually. We cross above right there. You have like a bottom, you have a trough zone, and then you have one more tag below. And this last tag below, this is actually usually a failure up here. And what happens is you get rate cuts like right here. And when you get your rate cuts right there, you get one more retest to the downside. It's like a fake out. And then you're breaking out of the trough. This is the trough down here. Yeah, and then you get a recovery. So, like some bulls out there a week or two ago when we were in the rate hike decision meeting, I saw a lot of bulls leading into that saying, we want to pause and then no more rate hikes, and the market will recover from that. And I'm in disagreement with that. I feel as though if they ever pause or cut without strong language or relaying strong language that rate hikes are not done, we would see a significant decline in the market. And so even yesterday with what he was saying, how it's spun, of course, in the news, it's just spun for story, right? Story time. But if anything, that still is good for a bull. Bulls, for any kind of continuation in the market, need to see the continuation of rate hikes. It means that what they're doing is working, that he's taking inflation seriously, and that we're not at the point where we've broken something. When a Fed chair says expect more rate hikes, it means that our economic cycle is full steam ahead. No matter what you want to think, I don't care what you think. I care what the Fed president thinks. And if he continues to think that he needs to continue to raise rates, it means he has not broken anything. It means that our economic activity is on fire right now, right? We got too many jobs being offered. We have too many people employed. So fascinating, too. I was just looking at the Detroit employment and unemployment numbers, and this includes all of Detroit, metro area Detroit. And they're in a Goldilocks zone. They're in this position where unemployment is rising, but it's not uncontrollable. But the offers of employment are also rising. So there's a lot of jobs available, right? And there's a lot of people taking on jobs at the same time. So there's like three things. There's like this like trifecta of things that are going on in Detroit. You've got unemployment rate is rising, but it was rising from a very small level, right? So it's still acceptable. You've got a jobs report basically for Detroit that's booming. Then you also have demand for workers that are unavailable. So it's like this perfect pocket of a Goldilocks zone. And of course, Jerome does not want that, right? Jerome he's not going to tell you this, but he wants some job destruction in this tightening phase. Let's see if I can pull up the video for you guys, the Senate hearing for when it starts. Give me a second here. So we're still kind of in that sweet spot right now with. Well, there. Yeah, there's still not a just a second here. There we go. we're still not at that point where we've broken stuff. That's the plain fact. And as long as he continues to promise that, and he promises it aggressively, it's a bull's best friend. I want you to know out there, I don't know how many economic cycles you've been through, but I've been through a bunch, and you're looking for that. You're looking for that moment where they're pausing seriously, like we're done. They're either above the rate of inflation, they're close to meeting the rate of inflation. They're close to this point where they've broken something. You're seeing large corporations, banks, stuff like that begin to fail. I always tell you guys that it's easy for you to find out. It's easy for you guys to find out when that's happening. It's easy for you to. This is a 1 minute chart right now. It's easy for you to see it in your own communities as it's happening. So most of my adult life I've spent in very wealthy places, and you could tell. I always talk to a buddy of mine, and I tell them an easy way to find out is if your tipped service employees that work for, or not work for you, but like if you go to like a hotel and the door people are really good at their job, or your sommelier is very good at their job. If you're a server, your waiter, your waitress, whatever that person is, if they're really good at their job, and you're like, wow, well, the service is getting excellent. Those are some sure signs that, and you can ask those people, say, do you do this normally? And they'll say, oh, no, I'm a realtor or something, right? And there's no work for me right now. And you'll also notice that you're able to do things that you wouldn't normally be able to do. All of those trips to fancy places that you could no longer afford, all of a sudden you'll notice that those will be offered to you, because these places like Vail, you can't go there if you're middle class. I'll be honest with you. You can't afford that vacation. Most people can't. Those vacations are $10, $20, $30, $40,000 for most people. Once in a lifetime trip for a lot of people to do. So if you'll start to see these things, you'll see your neighborhood will become empty. You'll see lots of for sale signs. You'll see unoccupied properties. You'll see people stop taking care of their lawns, that kind of stuff. Your friends will begin to get divorces. Those are very easy ways to see if the Fed has broken something. You'll see long-time companies that will go bankrupt, that unexpectedly. So we're at the end of one of those cycles, end of a tightening cycle. Typically, you'll see those things in advance. Right now, we're not really seeing that, right? It's not apparent. You hear people out there say things like, I can't afford this, or I can't afford that, or I'm working 2 jobs, or I don't know. Have you noticed how expensive eggs are, that kind of stuff? But they're not actually broken yet. So you want to pay attention to that stuff as he continues to his tightening cycle.
At 9:55 a.m. Eastern Time, we expect comments from Fed's Bowman, who delivers opening remarks at a Fed Listens event hosted by the Federal Reserve Bank of Cleveland. Text is expected, but no Q&A.
It's not saying anything here in my news feed about Jerome testifying today at 10. But I do have something on the Senate hearing from the actual Senate office, so I'll find out what that means. Another note today, too, is like clockwork, on Thursdays and Fridays every week, we get a green day. Then you get 0 to 8 Fridays for tech. Now, we have a short week this week. Now, we don't know if we're going to get that today. We do have, believe PCE tomorrow and Friday, and then we still have Jerome speaking today. And I think he's got some of the people that like to grandstand grilling him today. If I'm wrong on that, let me know somewhere. I'm still on the page that we've got Jerome today, and we're going to get probably a bunch of senators that want to grandstand. So anyways, okay, so that's all out of the way. Next thing, I have a bunch of stuff. If you're listening out there right now, if you're watching right now, if you have my phone number, you no longer have my phone number. I want you to know that. So If you're out there and you've tried to contact me via phone since yesterday, I have since changed my phone number through the day. Throughout the day when I'm broadcasting, at this point, I'm getting somewhere in the neighborhood of, you're probably not going to believe this, but somewhere in the neighborhood of 200 text messages while I'm live streaming. So as we make this transition to releasing the tool and all that kind of stuff, I've had to turn off that phone number. And just a point that I have tenants and business associates outside of this stuff, family members, that kind of stuff, that also try to contact me. And just at this point, I had to turn that phone number off, contact all those people, let them know. If you, some of you I will be reaching out to give my phone number to, so that you can contact me, and I'll let you know what's going on with that. So if you used to have my phone number, I want you to know that it's dead now at this point. And I probably have to call some of you on Signal or something like that from this point forward in the future. Some of you, though, if you're a partner or someone that works with me, something like that, you'll get my phone number on the background. So I had to do that yesterday and later in the afternoon. I'm being overrun right now with too much access or something like that. And that I can't. It's just like an avalanche at this point. It's not your fault either. It's mostly my fault. And I didn't expect to be where we are right now. And so as we continue to grow, I guess, I have to make some changes. It's not a bad thing. Just a lot of work to do. I didn't expect it to be where we are right now in any way, shape, or form. So, my phone. It's not and then outside of the live stream, it's 24 hours a day. So, and I get it, because I understand, because I know that a lot of you, your only interaction with me is on a live stream or whatever, but it's a job that's like 10, 12 hours a day minimum. And so it's I'm losing my productivity at the same time. Let's try to get what I need to get done and that kind of stuff. So just a heads up. And some of you'll get other ways to contact me, to stay in touch with me, that kind of stuff, that I can keep in touch with you as well. Of course, like DMs are still open, although my DMs are overrun at this point. My emails are overrun, kind of being overrun here in general. And I need to try to funnel some of this stuff so that I can actually respond to people and actually get contacted. It's like being overrun across the board. It's like DMs, Discord, Twitter, Gmail. And I have people actually looking at some of this stuff every day, and even that's taking me a half an hour just to get through with somebody doing it with me. So and it's not you, it's just mostly me. So I apologize, and we're going to try to make some changes to make sure that I can. And a point in fact too, Winky is a large part of who produces the show, and I really need him to get through to me during the day. Like, I need him in my ear all day long, from the start to the finish of the show, because I've got, I'm trying to produce all this stuff here, get all this data to you, then trade as well, and then trying to interact with Discord, and then trying to trade all at the same time. And it's really difficult. So it's not you guys. It's just it's hard for everybody to see what everything is. While of course our friends and that kind of stuff.
Economic and policy outlooks at the bank's annual policy summit. No text is expected.
So that's just a programming note for everybody out there if you're following along right now. Get on channel here. Yeah, it's like I think I have to go to like a and that's another thing. I have to go to a Signal thing, and then because I'm sure that things will get weird and nefarious, and that's not you people, but we'll attract that kind of stuff as time moves forward.
So Feds Bowman and Feds Mester are speaking at the same event, and we have posted the live video on the feed for all those interested.
It's kind of weird. They're like pushing Mester speaking at an event right now, and their posts or their yeah, I'm gonna put Jerome Powell on. I'm not gonna put Mester on. I don't care what he's saying. I got like nothing for him.
And we have posted the live video to Feds Powell's address to the Senate committee on the feed for all those interested.
Hold on a second here. Like Powell's kind of the guy you want to be watching here. There we go. So I've got him up in the background. We're ready to rock and roll for him at 10. Yeah, I love all you guys out there. I don't want you to think for a moment here that so Winky's saying take a look at Uber, so we'll take a look at Uber this morning. I don't want you to think out there that I don't like speaking to you either. I loved having conversations if you have conversations with me, I love you. I enjoy the conversations. It's
Hair losses, Nasdaq now about flat.
This stream is sponsored by TickStrike.
Yeah, Uber looks great right here. Wink.
Allows you to actually hear order flow in futures, forex, and stock instruments. Get a free trial at tickstrike.com.
Yeah, who said that? Gope89 said Cap hates us stage 5 clingers. Fuck no. Winky said to me yesterday, he said, I'm surprised that you give so much access to people as it is. He's like, people don't ever get access to streamers and stuff like that. I want you guys all to know that I call or speak or reach out to you guys all the time. When you guys want me to reach out to you, I do. I've been an open book all along the way with even to this point with most all of you. So, and I like that. I don't want you to think that I'm someone that's unreachable, and I don't want you to think in the future that I'm not reachable either. It just has to be something where more constructive, like you reach out to me, let's say in Twitch chat, let's say, right, or Twitter chat or DM or Discord. And we talk on a phone call that maybe is like through Signal or something. So we have this like, it's not finite, but hey, we're talking, and when we're done talking, we know that conversation is over. And the next time we want to speak, it's another email or DM or something like that. Let's see here, what's going on? Same place they're teeing off, right?
Bowman says
Right
we
up
will
there.
look for inflation on a consistent downward path in deciding appropriate policy steps at coming meetings. Feds Bowman says the level of inflation is still unacceptably high. Feds Bowman says I want signs of inflation in a consistent downward path, and core inflation has
get rid of that for now.
plateaued since fall of 2022. Feds Bowman says additional policy rate increases will be needed to reach So just to repeat that, Feds Bowman says additional policy rate increases will be needed to reach sufficiently restrictive level and control inflation. Feds Bowman says monetary policy has had some effect on the economy, but core inflation has essentially plateaued.
So we'll be with you this morning, but I do have some calls I have to make at the moment. I'll check back in with you guys throughout the daytime. So we'll be back. And you'll see me here in video and stuff. My microphone will be muted as I make calls and make some changes. Gotta do some stuff for Discord and stuff, some connections with the website and that sort of stuff.
So at 10 a.m. Eastern Time, we get Eurozone consumer confidence flash, forecast -17 on the prior -17.4, with a range of -15 to -18. US existing home sales forecast 4.25 million on the prior 4.28 million, with a range of 4.35 million to 4.15 million. US existing home sales change forecast -0.7% on the prior -3.4%. US leading index change month over month forecast -0.8% on the prior -0.6%. We also expect comments from Fed's Powell, who delivers the semi-annual testimony to Congress before the Senate Banking Committee, and from Fed's Mester and Fed's Bowman, who are speaking on the economic policy outlook at the bank's annual policy summit. No text is expected, but a Q&A with the audience is.
The hourly trigger right now is sitting at 435.59 ish. I don't know that not exactly that, but it's like right here. This is the same trap yesterday. Was right up in here. Also note that price is above the 5 minute. You can see it right here. And could be a trend day today. Might get a trend day here. It's setting up as a trend day. It's right there.
Ten seconds.
I'm gonna write the same thing in that I wrote yesterday. Danger zone for bulls is right in here. Where the trap is.
US existing home sales change 0.2%, 0.2%, higher than the forecast of -0.7%. US leading index change month over month, -0.7%, -0.7%. That's higher than the forecast of -0.8%.
There is a setup here, though, for trend day to the upside, like major upside day. You've got 1, 2, 3. You've got a 3 trigger cluster here. Let's just keep your eyes on it. There's like a trade for bulls here. Like if this bounces back up here. I would not be long, though, in here. You allow the algorithms to push up. And then for these two to come up here and carry you even higher. Still no word on the Senate hearing. No live yet.
We have posted the Eurozone Consumer Confidence June 2023 report on the feed for all those interested. JP Morgan now expects 2 additional 25 basis points rate hikes by the Bank of England beyond August, taking terminal rate forecast to 5.75% in November versus 5% previously. We have posted the U.S. existing home sales May 2023 report on the feed for all those interested.
Hiking interest rates can do little to solve that problem. It's a little wonder then that when American workers see the high prices at the grocery store, at the pharmacy counter, at the gas pump, along with rising borrowing costs for mortgages and credit cards and car loans, they remain skeptical of government and its willingness.
Just heads up, this is live audio of the Senate hearing.
Inflation is a complex problem. The Fed's been fighting it with a blunt tool, and we made progress. Inflation is at the lowest level in the last 2 years, giving hope that the price of consumer goods will continue to decline. And despite the experts' prediction, job growth remains strong. The country added 339,000 new jobs in May. Ohio's unemployment rate, 3.6%, is the state's lowest in 20 years. Unemployment for Black and brown Americans remains near historic lows. Think about what actually means for workers in Alabama and Ohio and North Dakota and Louisiana and Minnesota and South Carolina. What that actually means for workers all over the country. It means Americans have more opportunity and choice in their lives, even in places they haven't seen a lot of options in recent years. It means people have the power to demand raises and retirement security and paid sick days and control over their schedules. It means more Americans have the dignity of work that comes with a good job that can provide for your family. And look where that kind of power for workers is taking us. Last month, wage growth outpaced inflation. That's the way it should be. Today's hearing comes at a critical time. Last week, the Fed decided to pause interest rate hikes after 10 consecutive increases and to maintain the rate at its current level. For the many of us who are concerned that further rate hikes could do more harm than good, it's welcome news. The challenge you face, Chair Powell, is to ensure that workers continue to see higher wages while also continuing to rein in inflation. In previous hearings, you've noted with justifiable pride how careful management of the economy helped millions of workers return to the job market. It's those workers who stand to lose the most if the Fed overdoes its rate hikes, loses sight of the dual mandate, and drives the unemployment rate back up. As you've also noted, Mr. Chair, increasing interest rates is not the only tool we have to fight inflation. The Fed is not the only one with a role to play. Congress, the administration, everyone in government, and corporate boardrooms must do their part. There's no reason we can't continue coming together to bring prices down. More policymakers are finally recognizing what those of us in Ohio have known for years, that outsourcing the production of pretty much everything may mean higher profits in the short term, but it won't lead to a resilient economy with a strong middle class in the long term. We've taken steps to strengthen our supply chains in hiring and been bringing critical manufacturing back to the U.S., the CHIPS Act, the bipartisan infrastructure law, a number of things. We must continue that progress instead of lowering demand, which is just economics textbook jargon for making people poorer, laying off workers, denying raises. Instead of lowering demand, we can produce more, we can build more, we can grow the economy from the middle out. It's also our first semi-annual report from the Fed since the string of bank failures this spring. Those failures were caused by the same issue at the heart of so many of our economic problems. It's the Wall Street business model. Executives lay off workers. They put short-term increases in quarterly profits and their own compensation above everything and everyone else. At Silicon Valley Bank and Signature Bank, those in charge pushed their banks to grow too big, too fast. They made risky bets. They got massive profits. Executives were paying themselves bonuses right up until the moment that at least one of these banks crashed. To most Americans, that's not surprising. People have gotten all too used to big bankers treating the industry more like a game, or maybe more precisely, an endless ATM for themselves, secure in the knowledge they won't pay any real price if things go wrong. Mr. Chairman, as Senator Scott and I teamed up on a 21-2 vote yesterday, those days for bank executives are over. Chair Powell, I look forward to hearing today how the Fed will protect American workers in the fight against inflation and promote an economy with a strong, growing middle class. Senator Scott.
Thank you, Chairman. Chair Powell, thanks for joining us today. Such an important time. Your last appearance before this committee was about 4 months ago, just days before the collapse of two banks. And while we continue to investigate those bank failures, it's important to examine the macro factors such as rising interest rates that contributed to the bank failures and the current economic stresses American families face every single day. Looking through the lens, I want to turn to you in your role as Chairman of the Federal Reserve, a role that requires constant scrutiny because the American people deserve nothing less than the best we can offer them, the greatest opportunity to succeed, and the strongest tools to pave their path. Unfortunately, the bank failures earlier this year shook confidence in our financial system. But thankfully, our healthy and well-managed institutions stepped up, and we have been able to weather the storm. However, I've been consistently disappointed in your Deputy Vice Chair of Supervision, Michael Barr. Just yesterday, this committee passed, as Chairman Brown just said, near unanimous legislation to encourage good corporate governance. But not just that. We also wanted to focus on the supervisory failure that was a part of the legislation. Those are not the same actions taken by Michael Barr. I asked him twice when he was here before the committee if he would fire bad bank supervisors for the supervisory neglect that contributed to the epic failures of SVB and Signature. He would not commit to doing anything. And I would ask you in your role as the active executive officer, if you would take some action firing those responsible for missing what was glaringly obvious, now to all of America, certainly should have been obvious to the supervisors. I said from the beginning that this has been a failure in three parts, the SVB and Signature. It was a failure of the bank execs. The action that we took 21-2 yesterday reinforces Congress is willing to take the lead and hold bank executives accountable. Second failure was a supervisory failure, and that requires the Fed to hold folks accountable just like Congress did. And third, the Biden inflationary economy It has drove prices really high and resulted.
All right, so you see here, this we're testing now the hourly trigger. We had some failures on the hourly trigger in previous instances. This is the place where sellers have stepped in to the market. We said this morning that Thursday and Fridays, so Thursdays are usually green. If Thursdays are not green, it's like a 85% chance of green on Friday. So you're seeing it right now, the tests up here. And what I'm going to do here for you is bring up the trigger so you can look at it for yourself. And I'll leave it up here on the screen so that you can see the interplay here while this is happening in real time. I'm actually going to move this into a 1-minute chart so you guys can see it. If you are a bull, you should be taking profit here, right? You take profit right here. Price is above. We have a bull cross, price above, confirmation, move higher. Another confirmation here. You'd be taking the money and running here, right? And then you wait for price to break above and retest. So I'm going to show you what you're looking for here. If you're a bull, looking for a break above, down, and then you're waiting for the 1 and 5 minute to catch back up to take this trade even higher. So be looking for this here and this here. This will form a 3-trigger bull cluster, and you will see, if this happens, you will see a consolidation here and a move higher. You will not enter another bull trade unless you see this happen. All right, now if you see this happen here, this is when it becomes the actual bull cluster to the upside. This is a very explosive move, and that would be a daily trend all day long. So keep your eyes on this. There can be a moment or two before that white line gets up here for continuation. But if we do begin to stay above this hourly trigger, and you see the consolidation and then the move higher, as the move begins, this becomes like an 89% probable trade that it's going to print some really fat money. You can go into this with some serious size. But you need to see this 1 minute and 5 minute come up here, okay, and the confirmation trade higher. If it does present itself today, we are going to close that shit up there at 437 and likely close the gaps up here at 437.33 and 439.61 and likely 441.81 by Friday. So we get a nice explosive 2-day move. Could take 1 day, could take 2 days. It looks like it's happening right now. So I'll leave this. I'm going to leave this up on the 1 minute chart for you to see how it works. I do want you to be aware that the hourly, there's an hourly exhaustion point here for sellers, and we could lead to a big trend day to the upside here. I'm going to leave this up here for you to watch as they continue to speak at the Senate hearing. And I want you to be able to see what I'm talking about here. About this move right here. So we're beginning to squeeze above the hourly trigger to the upside. We're looking for a retest called the KISS trade. What we do is we squeeze above, smash above, come back down, and we get this big, huge continuation move to the upside.
While the jobs to workers gap has
I'll leave this up for you right now so you can continue to watch this.
Exceeds the supply of available workers. Inflation remains well above our longer run goal of 2%. Over the 12 months ending in April,
by the way, if price holds, ready for this? Price holds 435.62, 435.62-ish right in there. We're going to get a monster fucking move to the upside. It's just waiting for the 1 and 5 to catch up to it, and it'll be beautiful.
Change in the core CPI was 5.3%. Inflation has moderated somewhat since the middle of last year. Nonetheless, inflation pressures continue to run high, and the process of getting inflation back down to 2% has a long way to go. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. With inflation remaining well above our longer-run goal of 2% and with labor market conditions remaining tight, the FOMC has significantly tightened the stance of monetary policy. We have raised our policy interest rate by 5 percentage points since early last year, and we've continued to reduce our security holdings at a brisk pace. We've been seeing the effects of our policy tightening on demand in the most interest rate sensitive sectors of the economy. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. The economy is facing headwinds from tighter credit conditions for households and businesses, which are likely to weigh on economic activity, hiring, and inflation. The extent of these effects remains uncertain. In light of how far we have come in tightening policy, the uncertain lags with which monetary policy affects the economy, and potential headwinds from credit tightening, the FOMC decided last week to maintain the target range for the federal funds rate at 5 to 5.25%. And to
There's a little bit of concern here. I don't like seeing this this 5-minute curl over. See this right here? How it's rolling. I don't like seeing that. I would really like to see this 5-minute just keep pumping higher. Be really wary here right now. They're going to try to reverse this. Just keep your eye here. Price must remain above the green line. Must remain above that green line.
Determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time. We will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. We will continue to make our decisions meeting by meeting based on the totality of incoming data and their implications for the outlook for economic activity and inflation, as well as the balance of risks. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the long run. Before concluding, let me briefly address the condition of the banking sector. The U.S. banking system is sound and resilient. As detailed in the box on financial stability in the June Monetary Policy Report, the Federal Reserve, together with the Treasury Department and the FDIC, took decisive action in March to protect the U.S. economy and to strengthen public confidence in our banking system. The recent bank failures, including the failure of Silicon Valley Bank and the resulting bank stress, have highlighted the importance of ensuring that we have the appropriate rules and supervisory practices for banks of this size. We're committed to addressing these vulnerabilities to make for a stronger and more resilient banking system. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you.
Thank you, Chair Powell. Paul Donovan at UBS has discussed the role that corporate profiteering plays in persistent inflation. While inflation has fallen from 9%, as you know, it has peaked to 4%, prices continue to climb because of supply shortages and corporate profiteering, what we're starting to call greedflation. Given that rising interest rates certainly won't solve greedflation, why maintain interest rates at the current level or even consider, as you suggested, raising them again, given the risk of harming the livelihoods of more than 1.5 million workers and their families?
Mr. Chairman, the committee broadly feels that while monetary policy has gotten to an appropriately restrictive level, if the economy performs about as expected, that it will be appropriate to raise hikes again this year and perhaps twice. A strong majority of the committee feels that it will be appropriate again, assuming that the economy performs as expected 2 times before the end of this year. We've come very far, and the reason why we maintained our rate at the last meeting was to give ourselves more time to stretch out the time for making these decisions. We moved very quickly at the beginning, and we've gradually slowed down. This is just a continuation of that. But we are committed to getting inflation under control, and the strong majority of the committee feels that we're close, but there's a little further to go with rate hikes.
Well, thank you for that answer, but Mr. Chair, what Fed governors call cooling down, regular people where I live call them layoffs. I mean, the question is, why should working families continue to bear the cost of fighting inflation? Why should they lose their jobs so that corporate profits can continue to balloon? Let me move to the next question. Our economy's created 13 million new jobs in the last 2.5 years. Black and Latino workers with the lowest incomes have seen the greatest gains in job opportunity and wage growth. What the Fed considers too hot an economy has given these workers their first leg up in decades, if ever. We know that job losses will hurt those same workers the most. How will higher interest rates and the resulting job losses disproportionately impact Black and Latino and low-income workers?
Well, we have quite an unusual situation in the labor market where we've had persistently much higher demand for workers than the available supply of workers. So some of the process of getting demand and supply back into alignment has been taking place through declining job openings and through lower quits rates and through wages that are moving, that are still very high, but moving into more sustainable levels of increase. So actually there hasn't been a meaningful increase in unemployment. The unemployment rate has bounced around at historically low levels, and that's fine. That would be the perfect way for this to continue to happen. There's no guarantee that will happen. I would just say that it is working families who suffer most directly and quickly from high inflation, and it is for the benefit of those people and all other people that we need to restore 2% inflation in this country on a sustained basis.
And thank you. But in the dual mandate suggests that those workers, that obviously you look out for those jobs and those workers, but we also know that those workers are the first to be laid off. And I would hope that in your next meeting, the Fed.
So just a note here while you're watching this in the background, okay? You would have no position here, okay? So you don't take any position here. You let this here work itself out, right? So if you're looking for a position here, you see the price is below the hourly trigger. What you're waiting for is for this white line to catch up and for this red line to catch up. It's kind of like faltering here. So if it does begin to catch up, and if price begins to work its way higher here, starts to push its way higher, and you begin to see the cross take place here, I want you to note this white line right here as it comes up. You should see price begin to push higher here, and this red line should continue higher, and this is going to be the beginnings of a larger trade to the upside. You do not enter this trade ever until price confirms and is higher than this hourly trigger right here. So this 435 is a key level for you if you're looking for continuation to the upside. And I want to also warn you that, not warn you, but let you know that as this takes place here, right, this continuation will be explosive for a period of time, like all day long, like 2:30 in the afternoon, possibly even into the close tomorrow. So it's not like you need to grab one, like you don't have to have this one fucking tick right here. You can wait for it to begin to push higher. You can wait for this line to come up, wait for this line to come up and just confirm the 3 trigger bullish cluster. Okay, there's no like requirement that you are on this trade. There are some rules on this trade. Most of you should already know them. You can let each other know inside of the stream what they are. That you're going to want to, every time we recheck, we want to be checking that white line, right? Check it every 15 minutes, every half an hour, every hour, that kind of stuff, every 45 minutes as we go higher. And there will be an attempt to close. If it goes higher, there'll be an attempt to close.
Proposal that's been circulated, but it's in my understanding it's not final, and I know things are still.
Be an attempt to close 436.80. There'll be an attempt to close
the capital increases that are getting so much
437.35. There'll be some volatility in here.
So some capital increases in the
There'll be an attempt to close this up here, 439.60. And believe it or not, way up here by Friday.
Yeah, and yesterday you said we want
441.95.
the G-SIBs, the 8 largest banks, to have high levels,
Stuff up here.
very high levels of capital.
All that shit up there.
You stand by that statement?
So you're looking for this to see if it happens. If the sell side right now does not want to see this happen, sell side does not want to see this break above. If this break above is successful and you're short, just be very, very careful because this stuff gets this stuff becomes like an unstoppable force to the upside. So if you're sell side, this is where you're selling right here. I want you to know that there is an hourly shift happening right now. You can see this hourly is trying to turn around. You can even see it already beginning to happen. And this is the expectation as each hour goes forward. And bam, bam, bam. No confirmation yet. But just be careful of it. If price begins to trade higher and you're short, might be time to take some profit and look to re-enter a short later on. A failure on a high or something like that. When any of these resistance levels up on high. It is building for an explosive move, though. If you're on sell side, watch out.
The lower the capital for the private sector, which means fewer loans and less capital for those who are actually creating jobs. And so when we have too much capital on the sidelines, then we have too little capital for actually creating and producing a vibrant economy.
One other note here, too. If you are looking for a short position here, what you're looking for, I'll show you exactly what you're looking for a short position. For confirmation, if you're like, hey, no, fuck you, Cap, we're going down. Bears told me we're selling the market in the world. Then you're looking for a rejection here. I'm going to show you what you're looking for. This is going to represent price, what I do next. You're looking for a rejection down here. Particularly the largest banks. Something like this, and then you would enter the trade the downside over here. Even preferable down here, like 430.75-ish, or excuse me, 433.75-ish. That would be my entry there. So you'd be looking for a rejection, and then a couple grasps of air, and then continuation to the downside. So there's no real short trade for you here at the moment either. You're just looking for the rejection at this point. We are looking like we're going to get explosive here in a few moments. So put your fucking seatbelts on, bulls.
The way I look at it is wage increase minus inflation has led to less spending power. Do you disagree with that?
No, I think that's right.
Yeah. And so in the end, as we celebrate what seems to be a healthy economy, the truth of the matter is that the average person in our nation today struggles to make their ends meet because of the inflationary impact.
One more second here. I'm gonna do one more thing for you guys. Put you back on the regular charts you guys are used to. So I want to check for you, make sure we got, just in case we're gonna do this rip faces off rally here today. Put your calls in, and we're gonna put some
use for servicing our debt, the less money we have for meeting.
Right there's one.
Therefore, sprinting.
Right there's one.
Printing and spending $4 trillion.
There's one. Giant fucking gap up here.
Has led to the inflation that we're seeing.
All that shit needs filled in. All that shit needs filled in right there.
How do you, as chairman of the
It's R3.
talk to policy?
There's your last one up there. There's the other two up here.
Being responsible from a monetary perspective. I know I've seen and heard your comments that that's not your lane, but certainly the actions that we take here impact.
So you see it. Here's your bull cross. It's happening right now. You see it right there. Here's your bull cross, reversal to the upside.
Inflation.
Let me start by
See it right there.
actually, you were talking about real wages a moment ago.
Yes.
Real wages
And you're looking for this like check right here.
end of the income spectrum, and now they are
For this like bam, 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 and then start ripping some faces off.
To your real question, you know, I would just say this, that the U.S. federal budget is on an unsustainable path. It has been so for a long time. We need to
Check it out on a 1 minute chart.
sooner or later, and sooner is better.
See
than
the
later.
check happening right now.
But that's what I can say.
See it right here in a 1 minute chart. Explosive move for the bulls here in the open. The 1 minute chart. And they're going to recheck this right now. And I'm going to put you back on the 5 minute.
As a high level matter from the standpoint of the economy.
That yellow represents
Well, here's
the white line on the tool.
works for me as
This yellow line is representing that white line. This is showing you the way is up, like
if my line
giant
is on,
moves to the upside.
and I keep
Be
getting
very fucking careful here if you're a bear.
I'm going to say something to the line. At some point, I think it's your responsibility to talk about the importance of fiscal responsibility. That to the side, my last thought and question for you is that SVB suffered because their bond portfolio ended up carrying water in a negative way. You have a $8 trillion balance sheet and beyond. Every report that I've read is that your bond portfolio, our bond portfolio, the Fed, is underwater as well. Can you talk to me about the losses that you're experiencing at the Fed from a bond perspective?
Remember that the way it works at the Fed is when we buy assets during QE, we pay for them with overnight interest rate reserves. And we've, for many, many years during the QE era, we've earned a spread, and we've been sending money to the Treasury way over $1 trillion since QE started. And so now that rates have gone back up to 5%, that process has reversed. And these are paper losses. They have absolutely no effect on our ability to conduct monetary policy or really on the economy. It's an accounting fact. If we retained capital, then that would be it would look completely different. But we don't. We give all of our profits to the Treasury.
So you were giving profits to the Treasury, now you're not. That has an actual effect. I mean, if I was getting $10 and now I'm not, there's an effect.
Well, the Treasury then will have to borrow money that it doesn't get or raise taxes. It'll have to get the money to carry out the spending that Congress authorizes. Yeah. But that's not going to it's not going to affect interest rates and things like that much.
To me, I have the holistic view of our economy where if, in fact, we have fewer dollars coming in, which requires us to raise taxes, that in the end has a real impact on American taxpayers. But thank you.
Thank you.
Senator Scott, Senator Menendez in New Jersey.
Thank you, Mr. Chairman. After announcing the rate hike pause last week, you said that inflation has not reacted much to the Fed's past hikes. And I'll admit I'm a bit puzzled by that statement. The Fed's first rate hike was in March of last year when non-core inflation was at 8.6%. It is now 4%, and core inflation has fallen as well. So that sounds like progress to me, especially when you consider that according to the San Francisco Federal Reserve, it can take more than a year for tax rate hikes to take full effect, which means that so far only 3 of the 10 rate hikes since last year are in full effect. So can you expand a bit more on that statement from last week? What progress do you expect to see that you currently aren't seeing?
Sure. So, of course, you're absolutely right. Headline inflation has come down by essentially half, but that's largely due to energy prices coming down and commodity prices that go into food coming down. And those are not, I won't say that they're not affected at all by monetary policy, but they're principally affected by other things in the economy. The war in Ukraine drove energy prices up quite a bit, and also food prices. That's not really, those things are not principally a function of monetary policy, although we probably have some effect at the margin. So we look at core inflation, and we look at how tight the economy is. We are seeing progress, for example, in supply chains getting better. That again is not really a function of monetary policy. Really, where monetary policy takes effect is in the service sector. And that's where we haven't seen much progress. So, but we are seeing progress in other places, as you point out. Inflation broadly is coming down, but as I said in my remarks, we still have a long way to go. Inflation's still running between 4% and 5%.
So, do you think that the lag period for rate hikes to affect inflation has lengthened, or are rate hikes as a monetary policy tool becoming less effective?
I don't think they're becoming less effective, but these are real questions. And the thing with lags is, this day and age, financial conditions react before we act. So the markets are already pricing in rate hikes. So that's quicker. But the effect of those financial conditions on the economy still takes time. It works very quickly on housing, for example, but less so on the service sector, which is not very interest sensitive. So I don't think that has changed. Others have a different view and different directions they think in which it's changed. There's not a consensus agreement on how long monetary policy takes to affect the economy. So some people think a very long time, some people think right away. So I tend to think let's look at the middle of that, and a year and change is that's not a bad way to look at it. But policy actually started tightening well before that. Before we didn't raise rates until March, but policy had already tightened substantially before the first rate hike in March.
Well, I will say, I know that you have a dual mandate, you know that as well. The last jobs report shows that unemployment is starting to tick upward for women and African Americans. So I hope that the cure is not more consequential than what we're trying to achieve. Recent reports reported that there's almost $1.5 trillion in commercial mortgages that will come due in the next 2 years, many of them held by small and regional lenders. With property values declining and interest rates rising, these mortgages could be serious liabilities for many banks. Do you think that we may see some banks fail as these mortgages come due? And if so, what can we do ahead of time to prevent that scenario?
So we're of course, we're spending a lot of time on these issues, and we have been for quite some time. And again, I think you put your finger on it. It's really which banks have concentrations, high concentrations of real estate, and that is not seen in the large banks. It's seen in some of the smaller banks. So we've identified those banks, and there's a supervisory toolkit where we work with banks to try to help them resolve those issues by raising capital or dealing with what's happening. And of course, what is happening in the office space nationally? There's an issue with people working from home and just less demand. There's a sort of one-time adjustment going on. There are also some other pockets of commercial real estate where there's some softness. So we're working with banks to work our way through this. We're very aware and very focused on the problem.
Well, I'm concerned that it's a ticking time bomb. And let me just say that last week you said that commercial real estate risks are unlikely to pose a systemic risk because the loans are broadly spread and mostly held by smaller banks. But how can we ensure that the potential losses in the commercial real estate don't lead to the draining of assets from smaller and mid-sized banks, and then create further consolidation in the banking sector that brings us back to, I don't want to be back to 2008 when I was here and was asked to do extraordinary things.
We certainly don't want to be there either. And so we're being pretty proactive about reaching out to these institutions and trying to help them get through these significant issues. Again, it's not all smaller banks. It's just some of them have high concentrations in real estate, and it's not in the large banks, which of course was where the problem was in 2008 and 9.
Thank you, Mr. Chairman.
Thanks, Chairman. Senator Kennedy of Louisiana is recognized for 5 minutes.
Thank you, Mr. Chairman. Thank you for being here, Mr. Chairman, and to your colleagues. Thanks to all of you for giving so much to our country. As you know, our fiscal year, our meaning the federal government's fiscal year, begins October 1. We're in the process of putting together a budget. If we pass a budget, we meaning Congress passes a budget that increases spending by, let's say, 10%, roughly $650 billion, what will be the impact on inflation?
So if it's, it depends on, of course, if it were funded by tax increases or other spending cuts, I guess in your hypothetical, it's not. It's so I think deficit spending at the margin stimulates the economy at the margin. It's a big economy, though.
And what will be the impact on inflation?
It would probably be a small effect on inflation ultimately, but there would be an effect through stimulation of the economy. It would be more demand, which would, just in general, I'm not commenting on.
I know.
I'm sort of commenting on fiscal policy here, but nonetheless, there would be an effect on inflation.
I'm just asking you about basic economics.
Yeah.
I just read a piece by one of your economists from the San Francisco Fed, Mr. Shapiro, who's arguing that labor costs have virtually nothing to do with service inflation and a negligible is a negligible factor in broader inflation. And I read this stuff from some of your people, and I just wonder what planet they parachuted in from. If Congress passes a budget, in my prior example, that reduces spending by 10%, roughly $650 billion, what impact will that have on inflation?
So that would, you'd have less stimulus for demand, and you'd be cutting programs if you did that, and therefore you'd be slowing the economy down. and the impact would be less demand. Neither of these ideas affects the supply side at all. So less demand would mean less economic activity, less spending, and that would have a negative effect on inflation.
Well, more stimulus by federal spending is inflationary. Is that right?
It has so we've been in this situation where inflation was so stable for 25 years, you remember, and almost nothing that we did mattered for inflation. And it's called the so-called flat Phillips curve, where there just wasn't a connection between how tight the economy is and inflation. That does not appear to be the case right now. I think many people would say that the Phillips curve is now not so flat, and that there is an interaction between.
So that's a yes.
I think that's a yes. Yeah, it's
Okay.
this is the economics, you know.
And less spending by government it means less stimulus, which tends to be disinflationary. Is that fair?
Yes. Yes.
Okay. Let me ask you about the Basel III end game. You know what I'm talking about?
I do.
There's been some reporting, and of course, not every country has to follow the Basel recommendations. The European Union is not following. They're going their own way, and we're kind of going our own way in America, using the Basel directives as a guidepost. But it's been reported that the Fed's going to raise capital requirements by as much as 20%. Or, excuse me, it's going to raise capital requirements to 20%. Is that right?
No, the idea would be to raise them by 20%. In other words, if 20% of whatever current capital requirements are, you would raise it by 20% of the total existing amount.
Okay.
So
if J.P. Morgan's capital requirement right now is, let's say 13%, it would go to 15%?
Right, something like that. If that were to be what happens.
And this will be for banks $100 billion or more?
No. There isn't a final proposal. So, and I know it's still in motion. I know things are still changing.
Yeah,
so.
but you folks are talking
I've been
about
briefed
it, and
on
you're going to have a lot of input.
No, that's right. So, but I will say, sorry, what was it? Your question was?
Are you going to raise capital requirements for 20% to banks $100 billion or more? Or are you going to affect community banks as well? Smaller?
No, the capital requirements will be very, very skewed to the 8 largest banks, the G-SIBs. There may be some capital increases for the other banks, and there won't. I think none of this should affect banks under 100 billion.
The really big banks you're talking about?
Yes.
Are they the ones that are at risk right now?
They weren't. They were a source of strength in a place of strength.
They're doing pretty well.
Turmoil.
Oh, so they're trying to sell you down here, huh?
Big to fail to them.
These fucking sellers, man, they're relentless here.
I mean,
look at these fucking guys. They just don't fucking care. They're like, get the fuck out of here.
As I mentioned, we spent a lot of time and a lot of effort raising the capital standards.
No trade for bulls up here. Already let you know that earlier, so hopefully none of you were long here. You were waiting for the confirmation. There was no confirmation. So for sell side, if you're looking for confirmation to the downside here, you have some sort of confirmation here right now. I'm going to bring up the SPY chart here.
Slightly different perspective than
so if this is now on the bear side, let's say the bears are winning this trade here, you're going to be looking for this right here. I drew this out for you just a few moments ago where I said for the sell side, you are looking for this turn here, and you're going to be looking for the white line here to pick up the trade. You don't need to have had this trade or any of this stuff right here. You just need to have the confirmation that we're heading lower. So you're going to be looking for a rejection here to the upside. You're going to see a couple green bars, and if sellers can drown the buy side, you will see another move to the downside. You can jump on the trade right in here once you have confirmation. But otherwise, this is all the crazy zone, right?
Levels at roughly what they were in the Clinton administration. I mean, which in no way restrained economic growth, the budget would only have.
If you're sell side, you can start a short here if you want with a stop above. Hold on here.
Well, I'm not going to ask you to comment on that because I know you don't like to comment on fiscal policy, but I feel that that's important.
You would need to, this would be your stop right here.
Think about what is driving inflation and
Right about there.
what we are doing about it. I have been really struck by how remarkably resilient the labor market has been over the last 16 months or so, which is a good thing as we do the work we want to do to grow the middle class and create more opportunity and more financial security for people.
If you want my opinion on what I think is going to happen, I think they're going to go to the fucking moon, man. But whatever.
Historic lows.
They're trying to sell it. They're like, the sellers in this market are kind of wild. Hold on, we'll talk to you guys for a minute.
Real wage growth has been.
So I was looking at, last night and this morning I was looking at, it was a couple things. I'll show you guys some couple cool things. I was actually gonna go on live late last night. I wanted to talk. I was on the phone last night with Winky, and I'm gonna ask you guys what you think of this. So I'm gonna ask you guys some serious questions here. So it's kind of cool. A few notes on this market. It's very indicative right now. I've got Powell on in the background.
So, I mean, I think, clearly
but I got
we're not
some fascinating stuff for you guys.
I'm encouraged by the progress
So
far.
when we're in a bull market, a bull run, right, you can tell that they can't sell cash market. All of cash market gets bought. You can see when we're in pre-market, after hours, Globex futures. That's when all the selling is done, right? To get price where it needs to be. But you're not really seeing major selling in cash market. It just isn't happening. It's being bought. We're down 1.8% after how many down days? It's been
path for inflation to continue slowing without us seeing significant job
1, 2, 3, and 4, right? And we've got this giant bull flag here, right? And most of the move, that 1.89% or whatever, is all in very liquid markets. It's not in cash market. There's just like major recovery, right? So you're seeing the market be bought, and you're also seeing dealers counter that trade in futures, right? So taking the opposite side of that trade, right? So anyways, the point here is that you're not seeing major cash markets selling. When we're in negative gamma, when we're in a negative environment, you'll see futures get bought and cash market begin to sell. So we're not seeing that at this moment here in the market, right? So, so my only point here is that traditional charting is leading into something here with you. I want to show you guys something kind of neat.
The last few years, we really haven't seen that for 50 years. So we do think it'll come up a little bit, but ideally, most of the loosening will come in the form of other ways.
Right. And
I was talking to Winky yesterday about the interplay between the tool and bull planes and bear planes. So just looking at the SPY here, right? If I was get ready to clean some of this stuff up. So if I was looking at SPOOs, right? Just SPY, just very simple, right? I would be like, yeah, you know what? This is extremely bearish. And not only is it extremely bearish, so I was talking to Winky last night. I'm like, if I was looking at SPY right now,
so our part of it is to try to,
I'd be like, yeah, you know what? I'd be warning everybody to be like, we're gonna have probably 1 to 3 down weeks here. So just this cross right here, as it was forming, and then this cross right here. So this cross right here and this cross.
Thank you, Mr.
So if you may or may not know this, but there's an hourly trend, a 4-hour trend, and a daily trend, and a weekly trend. And as you get these crosses, bull or bear, you see this here, bear plane, you can estimate the length of time that the market will be down. Key stuff for you guys to know. Some of you guys know this, but a lot of you don't. You can estimate if you start to get rejections over here, to the downside. You can kind of estimate that you can get some downside on an hourly chart for like 1 week, sometimes to 3 weeks. But to expect at least a week of down, maybe even 2. 4-hour trend can be like 3 weeks to 5 weeks. Daily trend can be month, 1 to 3 months of down. Weekly trend to the downside can be many months. So just traditional charting, you're looking at this, I'm like, man, we're turning into bearish here. It's kind of like one of those places where you're kind of like, is this a turn? Now, sellers have been wrong on these turns. If you look at NASDAQ, or I think even Q's shows it, but it's like NDX, you see these same things, right? I want you to see this here. You see this cross right here, this is NDX, right? See that cross right there? And we've had that before. Had it right there. Had it right over here. And surprise, surprise, boom, we reversed, right? You're expecting that down move for at least a couple weeks. Boom, that down move. And we're once again right there. And these sellers are like, fuck you, no, we're going down here. Cap, right? We're going to get down to this 14,652 and cap. We're going to roll it over here and get some correction, right? Close all this gap stuff down here. And so if it's not proving itself, right? If these crosses aren't proving themselves, how do you know? How do you get confirmation? There's some velocity stuff you can look at to get that confirmation. And so it's a fascinating thing to be looking at, right? It's kind of fascinating here. You know that sellers know that if we get above here, what happens is you get explosive moves to the upside. It like just rips faces, right? Week 1 to 3 weeks to the upside, 1 to 3 weeks to the upside. And these sellers don't want to see that because you know that the trend is up.
Office dog, but
Hello back to Gus.
but
So just on this point real quick with you, if you're following along, I was talking to Winky last night, and I was like, let's look at a ticker, Winky. I want to show you something. Because we're trying to build this stuff into the algorithms on for you guys, right? And so I'm looking at Palantir right here, PLTR. And on PLTR in a 30-minute chart,
some things that would get me to a yes, but
looking a little long in the tooth here.
One of the concerns I had about that meeting is I think we could
It's looking little long in the tooth to me here, right?
and think that we're done.
And but my hourly trend is on the downside, and my daily trend's just kind of getting there. It's almost like pretty fucking close. So does it look bearish? Yeah, it does. But how bearish does it look? Not too bearish. Not as bearish you might think. It's holding. It's being bought on its monthly. Daily trend is like the boss man. And truly weekly trend is boss man as well, and it's trending up. So weekly trend is telling me, nope, we're bullish on Palantir. We're just looking for a dip to buy. And daily trend is like, fuck you, we're holding this. And even if we have a momentary down, we're just looking for a dip to buy. So we're looking for a dip to buy on $14, possibly a dip to buy down at $11 or $12 here, right? But if I'm looking at Palantir in a traditional chart, if I'm looking at Palantir here, like PLTR,
there are supervisors out there that are probably understanding.
It's a 1 hour chart on Palantir, and we're only 1 day after getting a bear cross, right? Bear plane right here. We got a big bear plane. So if I was looking at this with just traditional charting, and I'm looking at this bloodbath here, in my view, I would be like, yeah, you know what? We're probably going to get 2 or 3 down weeks in Palantir. And if anything, this entire move from Palantir could be erased. I would be like that. I'd be like, you know what? We're probably going to get down here and erase this entire move. We're going to $9.58 at minimum, and it's probably going to take 1, 2, 3 weeks with this major cross here. But we've seen these crosses on NASDAQ and SPY resolve themselves to the upside. So how do you tell if this actually resolves down here at $11, $10, $11, excuse me, or even right where we are at 14.22? So right now it looks extremely bearish, right? It looks extremely like sell the fuck out of it. Sell 14, this is where the daily trigger is, and actually sell it down to $11. Get it down into this weekly over the next few weeks, then we get the dip buy on Palantir. But we've seen this reversal. My point to you here is that this year, we have seen the reversals right where we are. So for however extremely bearish this looks, how can we tell if this holds or not? How do you tell? So the answer to the question is this. I'm going to give you the answer to this. So this looks extremely bearish here, right? We're right on the cusp of the weekly or the daily and the monthly on PLTR, right? So you have 1387 is where we are. 1387 right down here. This is the drop. This is a big one. This is like the hold the line for the bulls on PLTR. And your next one is likely at $11.23, right down here.
We'll be submitting questions for the record. Thank you, Mr. Chair.
Thanks, Senator. I would add that I don't think that.
So how does a seller or a bull or a buyer have an edge? If you're a trader, right, you need to have an edge. And just by looking at this chart, you already know, and looking at NDX and SPY, you already know that a lot of sellers did not have an edge. They did not have an edge. And as we went up, when they were trying to put size into the market, and they were like, "Hey, it's showing itself right now. I'm gonna slam down 100 grand, and we're gonna go to the depths of hell." And we have friends here, right, that show us their losses, right? I lost 600,000. I lost 100,000. I lost 300,000. Like, people are like, I got fucked up in that up move in the market, and I didn't have an edge. And so when you need an edge in the marketplace, so right now your edge is, as a seller, you're like, hey, I've got confirmation here. I got the fucking bear thing here. I got the fucking confirmation right here in Palantir. We're going to the depths of hell. Now, I'm not anti we don't go to the depths of hell down here, but they need a couple things. They need some edges, right? They need to know some things. They know that they have to get underneath. With the tool, they know they have to get underneath 1388. So if you're a seller, you need to see price. You should be taking profit here, believe it or not. As a seller, you take profit and you wait until you get the break under 1388. That's your next trade down to this $11.24. So there should be no trade for you as a bear on PLTR right now. There is no trade for you. It's actually under with confirmation to the downside to $11.24. Although this would seem like it is right where it is right now. It is not. Now, this is the second part. Is there a trade here for a bull? No, there is not a trade here for a bull. And I want to show you, bring Palantir back up for you, PLTR back up for you as an example. So what you're looking for as a bull for PLTR, the instruction to you would be PLTR needs to hold $13.88, and then you need to wait for the hourly trigger to come down and flatten.
That labor supply and demand are getting into better balance.
And you guys are going to get this tool here coming up here and soon, really fucking soon. So there's no trade for you here as a bull, but if you see price,
especially in healthcare,
hold,
all sorts of areas, and
pop up here like a relief rally on Thursday, Friday, right? And then begins to go higher. You do have a trade in here. You do have a trade in here. You see how you have a little bit of trade here, you got a little bit of trade there, you got a second trade right in here to the upside. And note here that the daily trend has not turned down yet. You see it right here. It has not turned down. Price is not broken below it. And this could be another bear trap. So if you're a bear on Palantir right where we are, for you to have an edge,
then you also have this other responsibility.
An edge. We already know that a lot of you have lost a fuck ton of money not having an edge, right? What are you looking for to take that trade to the downside? As you're looking for the break of the daily, right? A confirmation of rejection here, and the hourly to come down and help you to get down. You need the help as a bear for the hourly to continue to the downside and break this daily, and then you enter your next leg down for a short on Palantir to 1124. You need this as a trader. When you lose 600 grand or 300 grand or 100 grand and you want to put some size on a trade, you need to have that confirmation. Until you get that confirmation, you're going to get kind of fucked here, right? We know that as well as when we're below price on the hourly, the trend is down. Currently, it is bearish, right? Price is below the hourly right now. But we are on this next level here, right? We're testing the daily, and we're going to continue to test this daily until we have the velocity of the hourly trigger to push us through and down. But until that happens, these are the moments where bears get fucked up, and bulls too. If this was flipped around right now, if this was flipped around, it'd be the same thought process, that as we come into that daily trigger, you'd be taking profit on your longs and wait until we break above, and the hourly is going to come help you on the next leg higher. So just a key note here that's fascinating, because if I'm looking at PLTR where it is right now, just traditional chart, and I'd be like, yeah, that's a fucking instant short right where it is right now. For me, with this, I'm like, I'm going to wait and see what happens. So if you had this tool, you'd be like, and you're like, I fucking hate PLTR, you don't have a trade here. You actually literally don't have a trade to the downside right now in PLTR. You got 0 trades. You need to wait for the break below and the rejection. You need to wait for the hourly to come help you out to the downside. So like if you're going to time a trade, like timing a trade, you see me come online and I go, buy Bitcoin right now, or sell Tesla right now, or buy Tesla. That's because all this stuff has worked itself out, and it's that moment where we go lower on a ticker. This is where one of the traps are for sellers. And if this was in reverse, it would be a trap for a buyer right where we are. So Palantir, and specifically the SPY right now does look very bearish to me, right? Just on a baseline, it looks bearish to me. I'm assuming there are sellers out there that are saying the same thing, like, we're extremely fucking bearish. We're going to get a correction. NASDAQ, extremely bearish. We're going to get a correction. Google, we're going to get a correction. So I'm just fascinated to watch how this plays out throughout the day, throughout today, tomorrow, that kind of stuff. And this could be a trap, right? This could be a trap. So you're looking for, you should be getting stopped out right now if you're sell side, believe it or not.
More assets of whatever character, including treasuries, then they would have had more capital.
And we're gonna go over this stuff. You guys are gonna get the tool. We're gonna do it together. You're gonna get the white paper. You're gonna be like, I get it now, and you're gonna be able to look at previous examples of this, so that you have an edge against other people. So when you're gonna hear people that are bullish, you're gonna be like, fuck no, I'm not bullish. You guys saw me closing long positions in the market. Over weeks and weeks, right? I was like closing this, closing that, I'm closing the IWM because of this, I'm closing all these spec growth because of that. Now I'm just trading 0 dates. I don't have any size in the market anymore. Now I just want to pull back, right? And so you guys are gonna have access to this stuff, so you can see where you trade right along with me. Be like, yeah, I shorted that shit right down to that yellow line, took my money and ran, and then I'm waiting for it to get below the yellow line so I can re-enter the second one, right? So I can keep going down, down, down. I didn't get caught in a reversal of the upside on PLTR or whatever it is.
To the type of banking run that we
fucking baller, dude. I want you guys to know something. It's fucking baller. And oftentimes I hate day trading with you guys right now because if you guys had the tool out there with me, if you guys are working the tool with me, you'd know that we could just like come back and come in, come back, come in, and not even have the fucking day trade. Well, we can. There's ways for us to get alerts to actually day trade individual tickers. We can run it right now if you want.
That's what was going on.
I'll run it right now for you in the background. Hold on a second here. I'm supposed to be getting work done in the background right now, and I'm fucking not getting it done. Hold on a second here.
But you have to retain earnings or raise it or get some new equity. And if you
guys want a small list of shit to be looking at right now, take a peek at PCOR, PCOR. Take a look at GTLB, GitLab. Take a look at ALGM, Allegro Microsystems. Take a look at BRZE right now. Take a look at Unity, U. Take a look at IoT. That's Samsara Inc. Look at CRDO. That's Credo Technology. And look at Sound, SUN. If you're looking for something to day trade right now, those are the ones I'm going to give you for today. PCOR, GTLB. We'll list them off one more time. Get your pens and paper ready. PCOR, GTLB, ALGM, BRZE, U, IoT, CRDO, SOUN.
Some flight of deposits away from them and towards the larger banks. So I really worry about the.
So this stuff fascinates me because when we're at these pivots, right? Not this daily pivot, but we're at these market moments. Oftentimes this is where people lose big money. Big money. Like this is the bottom, or this is the top, or this is the next leg down. This is where matter of fact, most of my largest losses, like big ones, like six-figure losses, moments like this. Always moments like this. Right where we are, like everything's saying something, and it goes the other way, and you go, what the fuck happened? And you still believe in your trade, and then you just like grind six figures down to like fucking zero because you're just like, fuck this, I'm right, they're wrong, and it's gonna roll, it's gonna fail, it's gonna this. Then you can apply this to buy or sell it, or it doesn't matter. Like you could be bull, bear, I don't care what you are. So it's just fascinating, right where we are right now. And I spent like an hour on the phone. I actually ate dinner in a meeting last night, talking to Winky about this because I'm like, this doesn't happen often, and right now is one of those moments. I got to call you because we've been discussing this for a long time, and these are one of those moments where you're going to find out.
Thank you, Mr. Chairman.
So we want to look at it.
Sincerely, thank you for being here today. And first and foremost, I believe that the Fed must make sure that we have an economy that truly works for working families. I suspect you would agree. And the reality is that the tool of cooling the economy with interest hikes can push people out of jobs. We want to drive down inflation, of course, that makes sense. But we don't want to hurt working people to suffer. You know, how do you kind of square that together? Because it's quite a paradox.
So it's working people who are the most hurt by inflation. It is a bit of a paradox. I would agree. If you're living on
well, quite the paradox. Exactly. You're absolutely right.
Yeah. No. So if you're living on a fixed income and you're spending every dollar on necessities of life, transportation, fuel, food, clothing, and inflation goes up, you're in trouble right away. You don't have a safety net. You're not a middle class or upper, wealthier person. So it is for those people that we need to get inflation under control. It is also the case, though, that the tool that we have, and we are the organization that's charged with price stability, is to cool off demand so that demand and supply get into better alignment over time. And we of course would love to do that in the current situation with as little effect on the labor market as we can. And there's much cooling that can take off in the labor market that doesn't involve higher unemployment. However, I can't guarantee that restoring price stability wouldn't have some implications of a higher unemployment, but you have to think that restoring price stability will pay benefits to everybody, especially low and moderate income people, for decades.
Yeah. Thank you. No, and I agree. It's just such a paradox because you have a dual mandate. And now we're going to kind of change the gears. There's clear that inflation over the last years have been many causes. It includes rampant corporate price gouging and monopolies. While Americans have gotten ripped off, executives and shareholders have raked in record profits. It's deeply immoral. I understand that it's not the policing price gouging and not in the Fed's direction, but you might look at smart ways to fight inflation. Is it fair to say that big business have been jacking up their prices and way more than their costs have increased? Is that accurate?
So I think
just a note here, where they're talking about what Jerome is talking, or what Fetterman is talking about right here, is directly related to PCE tomorrow, or Friday. Excuse me, Friday.
Rates were very low, so demand was just very, very high, and we couldn't make cars. Literally, production of cars went down because there weren't enough semiconductors. I mean, I personally didn't realize that you needed a lot of semiconductors in a car, but now everybody knows that. So what happened was, how do you decide who gets the car? So
you had dual mandate.
Went up because when there's a lot of supply and restricted, a lot of demand and restricted supply, you get higher prices. As the economy returns to normal function and we have more semiconductors now.
So John Fetterman, he looks, he actually looks healthier. I think he had a heart attack or something. He looks good. I'm assuming the doctors are like, fuck you, you're not eating pizza and bagels anymore.
It's just the way the economy is working.
So is it fair to say that you don't believe that price gouging wasn't a factor?
So I think that the collision between very strong demand and limited supply was a big factor, particularly as it relates to goods inflation. It's not much.
Price right now is above the 5-minute 27 EMA. It's bullish.
For about 3/4 of inflation.
Okay. All right, thank you.
Thank you.
Ceding the time back to the chairman.
Thanks, Senator Fetterman. Senator Daines of Montana is recognized.
Chairman, thank you. Mr. Powell, good to have you here this morning. In Montana, as well as the Mountain West, inflation remains above 5%. In fact, we're higher than any other region in the nation, whether it's gas stations, grocery stores, increasing prices, and its real-life impacts remain truly a top-of-mind and daily issue for Montanans. With inflation remaining stubbornly high, I can't help but reflect on the warning signs that were ignored by my colleagues across the aisle while they raced to push through trillions of dollars in partisan spending disguised as COVID relief. And now the American people are bearing the brunt of this reckless spending. In fact, for the average American, unless you've received a nearly 16% pay raise over the past 2 years, you've effectively received a pay cut. Chair Powell, I urge you and the Fed to remain vigilant and steadfast in your effort to rein in inflation for the sake of all Americans. Unfortunately, record high inflation is not the only crisis the Fed is having to navigate. While bank regulators were more focused on climate change than actually regulating the banks under their supervision, several coastal banks collapsed and caused panic across the banking sector. Before the dust even settled, several of my colleagues across the aisle immediately began calling for increased regulations and greater capital requirements for banks, with little appreciation for the negative impacts these changes would have on small and mid-sized banks across the country. I've heard from community banks across Montana who are justifiably concerned that they will be wrongfully punished for the actions of a few poorly regulated and poorly managed banks. You mentioned several times in your testimony yesterday and again here today that the U.S. banks remain strong and well capitalized. Chair Powell, if banks are so well capitalized, why the urgency now to increase capital requirements that would really prevent another Silicon Valley Bank?
Well, let me say first that I think we don't have a final proposal to talk about yet. When we do, we'll be able to talk much more specifically about it. But for community banks and banks, any banks under $100 billion, I don't think they're going to be part of this proposal. So we're really talking about principally the very largest banks, the GSIBs, and to a lesser extent, the banks, the regionals, and then the banks between 100 and 250. And yes, the right question. The question is more capital the answer? And we'll be addressing that. We'll be making a proposal. We'll be soliciting public comment on that. I'm well aware that there's a trade-off here. More capital means more stable banks. It means stronger banks, but there's also a trade-off there. And with capital, you've got to make a judgment about where you draw that line.
Yeah, and to that point, increasing the capital requirements could in turn decrease lending. Will the impact this have on small businesses who may not be able to get a loan be taken into account before you finalize a proposal?
Yes, I mean, the thing is, stronger capital means banks will be able to continue to lend during difficult times too, right? So that's why we do it, is for those stressful times. But it is a judgment call, and there's a lot of science and arithmetic that goes into it. But ultimately, deciding how high to go is a challenging question. And we're going to be making a proposal, and I'll personally be listening carefully to the comments.
You alluded to focus more on the GSIBs and trying to spare the smaller banks, perhaps, from the impact. And I realize the proposal is still being developed, is not finally baked yet. But are you prepared to commit to sparing the smaller community banks from changes the Fed might propose on capital requirements.
So let me say, my understanding is that the proposal doesn't affect banks under $100 billion, and I would have serious questions as to why it would, and particularly most communities.
Just take a note that we are also seeing a reversal on NASDAQ. Similar reversal right now. Price is trying to break above 14,961.
Thank you.
Keep an eye on that NDX 15-minute bear cross is recovering.
I appreciate the wait-and-see approach the FMOC took at its most recent.
VIX dying, VIX forming a bear plane on it. Tesla with a massive bull cross.
Labor markets remain as tight as we've ever seen. It was noted, however, that the committee is poised to continue raising rates later this year. My final question.
IWM looking for a double bottom here.
On your outlook for the rest of the year, and speak to your
Get ready, man. It's there again. One more time. They're looking to take another rip faces off here.
target.
Yes, so I think if you look at the committee's forecasts, and mine are very similar, we expect modest growth going forward. Growth in the below the sort of longer run growth rate of the United States economy, which is around 2% or a little bit less. Growth lower than that. And we expect the labor market to continue to gradually cool off. And with that, there's an expectation that inflation will continue to move down later this year. And if things happen that are sort of broadly in keeping with that, the strong majority of the committee believes that it will be appropriate to raise the federal funds rate again once or twice by the end of the year. A strong majority came down on twice between now and the end of the year. So I think the data will tell us what to do. I think the point of our meeting, the last meeting, was really to moderate the pace of our decision-making on this because, it was very important to move quickly last year, and we did. It's not so important now because we've come so far and we're relatively close, we think, to where we need to get. But we will, people should believe, and broadly speaking, the data show that they do believe that we will do what it takes to get inflation down to 2% over time.
Thank you. Senator Hagerty from Tennessee is recognized.
Thank you, Mr. Chairman. And Chairman Powell, good to see you again. I'd like to start with something that has troubled me since our hearing yesterday regarding the Basel III endgame proposal that's coming forward by Vice Chair Barr. The proposal is going to have far-reaching ramifications, I think. It's rumored to have over 1,000 pages in it. Yet when I asked Governor Cook about the proposal yesterday, she told me she hadn't seen it, has not reviewed it. And my understanding is that the agencies, including the Fed, are due to vote on this on the 18th of July. And given the fact, and I think Senator Warner described it aptly yesterday, the potential for a perfect storm here, if the rumors that we're hearing about capital requirement increases that may be proposed are true, this may come at a time, banks may be preparing for a capital increase at a time when we absolutely need banks to be lending, not constraining lending by raising capital requirements. So I think there are numerous analyses, the impacts on the small business community, on the banking system need to be taken into account. And I'm very concerned, particularly in light of Governor Cook's response that she had not reviewed it, hasn't seen it, and didn't seem to have any perspective on it at this point in time. It's a very short window to undertake a decision on something as complex as we may be talking about with over 1,000 pages in this report. So my question of you is, how will this process be managed at the Fed in terms of the decision-making and the analyses that need to take place?
So I'll make sure that governors have enough time to carefully evaluate this. So the staff has been briefing governors, for the past few weeks about what. But the proposal is still evolving, though. You're still. I'm hearing even as recently as this morning, things are moving still. So it's not possible when you say we haven't seen it. We have not seen a final proposal. There isn't something to send to the committee, and I think. You can be briefed on the current state of where things are, and I have been in detail. But ultimately, when you sit down to read this large document, I'm going to wait for the final version to really do that. But you're right to point to the need for time to evaluate it.
Yeah, Governor Cook's response to me as she deflected yesterday just left me with a great concern. So I appreciate it. I just see no need to rush here given the significance of what's happening. And frankly, the other concerns you and I have discussed in terms of where we are today, I think it warrants very deep consideration. I'd like to turn to another item that you and I have also discussed in the past, Mr. Chairman, and that has to do with bank mergers. And if you think about a potential bank that's in distress, all things being equal, would we be better off for that bank, that distressed bank, to undertake a merger or acquisition, or would we be better off to let it enter into receivership?
The former.
Certainly, I agree with you. Yet we also, in the case of First Republic Bank, it was like a slow-moving train. Stock price had collapsed. There were actually, in my understanding, 11 different financial institutions that put forward proposals that would have, been a rescue package for the bank. Yet none went far enough to achieve an actual merger or an acquisition in that place. In fact, they let it go into receivership. And, my concern is that this administration has created such a negative environment for consolidations that it's a real issue. My question of you is, do you think the current state we are, should we allow more banks to merge, especially given the stress that we're seeing in the system?
So I think there was every chance given for and much hope bestowed on the idea of having that bank sold before it went into receivership. It just they couldn't make it happen, and that's unfortunate. Everyone would have loved to see that outcome rather than a receivership. No one wanted that to be the case.
I'm certainly in that camp as well.
Yeah,
my view is that there's an environment right now of uncertainty as the banking community looks at mergers and acquisitions in the guidance that the White House has given about very negative in terms of mergers and acquisitions against consolidations. I think that institutions are very reticent to move forward, and that's why I've introduced the Depositor Protection Act, which, among its many provisions, is going to provide a green light to well-capitalized, well-rated banks to merge with institutions that are under distress without having regulatory interference. And so as the committee moves forward, I hope that we're going to have opportunity to work on this legislation. I hope we can remove needless regulatory hurdles, and I hope we can actually encourage mergers and acquisitions that will protect taxpayers. One final point I'd like to raise with you, Mr. Chair. It's something that you identified nearly a decade ago. At that point in time, the Fed created a reverse repurchase facility that was intended to be a tool that would put a floor on interest rates. The facility was targeted at investment vehicles like money market funds, which actually play a significant role in the short-term funding markets. At that time, you joined others on the board in expressing concern about the possible unintended consequences of this facility, particularly in times of market stress. That's where this facility could actually exacerbate the so-called flight to safety. Since that time, this facility has grown to over $2 trillion worth of overnight deposits at the Fed. So I'd love for you to walk us through, if you might, the potential risks that this facility might pose, and take us through how it relates to basically pulling deposits out of the banking system at a time when we'd like to retain those deposits.
So the reverse repo facility really hasn't increased. In fact, it's shrunk in size since the events of March. So it's really not on net accounting for the decline in deposits. Really what's happening there is that market rates are higher than deposit rates, and depositors are moving their money. This happens in every cycle. I think I raised.
May I interrupt for just a moment,
please,
Mr. Chairman? So, are my numbers incorrect that we now have $2 trillion that are parked in this facility by money market?
We had $2.5 trillion before March, so it's come down in size. In fact, now that Treasury is refilling now that the debt ceiling is solved and they're refilling the Treasury General account, the reverse repo facility has been declining, and that's what we would have hoped to see rather than taking reserves out of the system.
Still seems
Thank you, Senator Hagerty. Senator Warner's recognized.
Well, thank you, Mr. Chairman. The challenge of coming a bit late, you kind of asked my question, but Chairman, great to see you again. I'm going to at least ask a variation on the same question I think a number of members have asked. And I know a lot of us are sometimes get the advantage of being Monday morning quarterbacks on how you navigate through monetary policy. I think you've generally done a pretty good job. I'm very grateful that you're on a pause. I hope that pause, as the data comes through, continues. But we definitely have some stresses with that monetary policy. Secondly, you were doing what, again, I think people on both sides of the aisle have called for in terms of quantitative tightening. And again, that doesn't have the immediate effect that the monetary policy has. But as we've discussed, and I think Senator Hagerty raised, we also have, the appropriate review that
Vice Chair or Barr for Supervision is doing on capital standards. And I think Senator Haggard and my staff told me even used the term I was going to use, perfect storm of these three all coming together.
I borrowed your term from yesterday and properly acknowledged that, Senator Warner.
I'll call it very stressful situation. And I understand, I think you pointed out to my friend from Tennessee, the capital requirements will phase in, but you could have all three of these events come together. I think you've addressed this already, but I just want to add my voice to that concern. Safety and soundness, you got a lot of jobs, safety and soundness, inflation control, and full employment. That full employment piece could be affected by this potential perfect storm. And again, I hope all of your colleagues, I raised this with the other members, the nominees for the Fed yesterday, and I hope you will, and again, I think you've been asked in the House, you've been asked here. I don't know if you've got anything else you want to add to what you've already responded on that, but.
I'll just say you're right. We're thinking very much about that. Fortunately, it's been orderly. The shrinkage of the balance sheet has been quite orderly. There's still a very, very high level of cash reserves in the system, and we don't think they'll be scarce anytime soon. We think the refilling of the Treasury General account, people have been focused on that for a couple of months. So far, early days, that seems to be going well. We're watching it very carefully.
But again, and it's easy to sometimes sit up here and attack rather than manage all three of these, but there could be this moment in time where these factors all come together that could have a really negative effect on the economy. Let me move to something I think that's not been raised. I have huge concerns. We've all litigated back and forth causation on SVB, but one of the things that happens when you get $40+ billion coming out of an institution in 6 hours, driven by an internet-based run, that is, I don't know what regulatory framework prevents that. And while I was glad that the SEC Chair Gensler put out a commentary that's saying, we do need to take a look on more transparency on short selling. We're not, we've found in the past short selling bars themselves don't prevent some of this. One of the things that a New York Fed official mentioned is how do we get rid of the stigma of a bank going, to the window. I mean, the thing is, rather than Fed being lender always of last resort, if we have that liquidity window, it's available. Banks are reluctant to use it, but in an era where people can move capital so quickly, having that liquidity tool available and not taking a huge amount of hits for using it would seem to me to be something that could at least take on this question of these internet-driven runs, which so far I've not heard from anybody on either sides of the aisle a really good suggestion, including I've thrown out a lot of suggestions that frankly, upon reflection, I'm not sure make that much sense. But this liquidity tool of using the window, the Fed discount window, is there a way to think about getting rid of the stigma? And maybe we as policymakers ought to make that point as well. But could you address that?
Well, it's critically important that people be able to use and willing to use the discount window and also the bank term funding facility, other facilities that we set up, and that they aren't marked down by the markets for doing that. And so
or marked down by the regulators or the examiners.
Yeah. But the concern is that markets will see this, and so I would say the first thing is do no harm, and that is Dodd-Frank provided disclosure of names and things like that at a quicker pace. That's one of the reasons banks don't want to do this is they know their names coming. I wouldn't bring that. I think whenever you look at changing that disclosure around use of these facilities or that, you should really consider that you're going to make the stigma worse. I actually think it's good that banks have been willing to use the discount window and the new facility during this crisis, and it's almost like the stigma is a little bit less than it was. I want to think that anyway.
Thanks, Senator. Senator Cortez Masto of Nevada's next. 2 Republicans in a row I called on, so Senator Britt, you will be after Senator Cortez Masto of Nevada.
Thank you, Mr. Chairman. Chairman Powell, it's great to see you again. Thank you. I'm very glad that yesterday, I think Senator Warner mentioned this, we had hearings for nominees to the Federal Reserve, and one of the nominees is the first Hispanic to sit on the Federal Reserve, Dr. Adriana Kugler, who has extensive experience economically as well as including congressionally confirmed positions. I'm looking forward to supporting her confirmation as well. Let me talk to you a little bit about tougher lending standards that might be affecting inflation as interest rates increase. Yesterday, Raphael Bostic, president of the Federal Reserve Bank of Atlanta, published a blog post noting that the tightening bank lending standards we see are directly due to the Federal Reserve's higher interest rates. Do you think that the credit tightening we see from regional banks is acting as an effective substitute to an additional interest rate hike?
It may be. We've been looking for that. We actually don't see a lot of evidence of additional tightening on top of what we had already been seeing yet, but we're keeping our eyes out for that.
And so then what are some risks if the FOMC continues to raise interest rates despite seeing the impact of these rate increases already resulting in more credit tightening and higher housing costs? And we talked a little bit about this.
So the risk is that the reason we've slowed down, really since last December, we slowed from 75 to 50 basis points per meeting to 25 at every meeting. And now as we as we get closer and closer to what we believe will be our it's uncertain, but we think our destination is, we've slowed down a little further. So we're trying to avoid the mistake of going too far. And that's all it is. And as you can see, overwhelmingly, people on the committee do believe that it will be appropriate to raise hikes 1 or 2 additional times. A strong majority believes 2 times this year if the economy performs as expected.
Thank you. And so I'm going to jump to employment, and this is something I talked about yesterday as well, because Nevada has this sort of workforce paradox. The most recent data shows that in Nevada, with both the biggest increase in job growth and the highest unemployment rate, I want to get your thoughts on moving forward as we address this concern, this paradox. Let me give you an example. Nevada has the largest percent increase in employment, which was 4.2%. We also had the highest unemployment rate in the nation in April at 5.4%. That's 2 points above the national rate. As you consider the Federal Reserve's mandate to keep unemployment levels low, how do you consider states like Nevada where there is that paradox?
So we only have the one federal funds rate. We really can't. We have to look at the national level, although we're well aware of different labor markets and also other interesting characteristics in Nevada.
Well, and we've talked about this because the labor market, particularly in the service industry, has been a drag, and we've seen that in Nevada. And you and I have talked about this as well. Is that something you consider as you look at the numbers, particularly in the service industry, and what are you seeing?
So we're seeing in service industry is really where we still see labor shortages. You still have a very high number of job openings compared to the number of unemployed people. And I think even in Nevada, you've got a job openings ratio to unemployed of 1.4 or something like that. That was unheard of before this period of time. And that just means there's still tremendous demand. And of course, in Nevada, it would largely be in, travel and entertainment sector, I would intuit.
And then talk about the housing data, if you would. It's another conversation we had, and how much of a drag that is on the economy as well, and what you're seeing.
So, housing is very interest-sensitive spending. Mortgage rates are very sensitive to our policies, and housing construction and housing sales and things like that are very sensitive to mortgage rates. So, you saw housing activity moved down pretty significantly when we started raising rates. You've actually seen it kind of hit a bottom now. We met with with a housing group, manufacturers, housing builders yesterday, and they say business is pretty good. It's largely new entrants, though. Many people have low rate mortgages that they're not eager to get out of, and so the sort of strength you see now is new buyers coming into the market. So the market seems to be improving. But again, it's the most interest-sensitive spending, or among the most interest-sensitive. So it's going to be affected when we tighten policy.
Okay, thank you. Appreciate you being here.
Senator Britt of Alabama is recognized.
Thank you, Mr. Chairman. I want to start by acknowledging the strength of the U.S. banking sector. In recent events that unfolded related to SVB, Signature, and First Republic, it highlighted the significant consequences that could occur when bank execs prioritize profits over risk management. And also when banking...
You guys watching this, right?
Regulators left numerous red flags unaddressed, which...
I see it. You guys see it?
...practices at these banks to continue for as long as they did. Let's be clear. This inaction played a significant role in these banks' ultimate demise. However, the mismanagement and excessive risk-taking that occurred within these institutions are not representative of the broader banking sector. In fact, I think it's quite contrary. Banks across the board have proven to be resilient, well-capitalized, and a source of strength in the global economy. In fact, I think you see that the U.S., comprised of banks of all sizes, is the world's most dynamic banking system. I'm concerned, though, with impending actions of the Federal Reserve that in itself will be jeopardized. If you look, community banks, for instance, have served our individuals in our small and rural communities across not only my great state of Alabama, but across our entire country in ways that have allowed individuals and small businesses to actually be able to achieve the American dream and to thrive. However, over the past decade, we've seen a significant decline in the number of community banks serving Americans. The U.S. has lost 71% of total banks in the last 4 decades, and unfortunately, smaller banks have made up a large portion of this. And just in the last decade, the number of community banks dropped by nearly 40%. That is in each and every one of our communities. We have to make sure that that strength is maintained.
Ooh, is she crying? Jamie Dimon pulls out a tissue for her and leans across and drops it on her desk. He's like, "Sing it to me, honey."
As the Fed is considering changes to the current banking regulatory framework, including stricter capital requirements that Vice Chair Barr has advocated for, how is the Federal Reserve evaluating the downstream impact of these on our smaller community banks?
So I think community banks, when we think of community banks, we think 10 billion and under mainly, but in assets. But I don't think under 100 billion. I don't think the proposals that are under consideration are really applying to those banks. So I think that it shouldn't be a factor for smaller institutions, which, as you point out, have been declining in number for 30 years.
So what do we do to support them? From your perspective, what is the Fed doing to support community banks and rural banks, or creating conditions where they can...
Jamie Dimon winks in the back corner of the room.
Driving consolidated interstate banking, and also just population moving out of, you see rural areas that have lost half their population, things like that. So we can't do much about that. The piece of it that we can...
You see Goldman Sachs is rubbing their hands together, waiting to get their hands on commercial real estate. They're like, he already got his regionals. It's our turn for commercial real estate, brah.
Part of that can just be once fit size regulation, high fixed costs, it will make even small bank, especially small bank models, unprofitable. So we very much try hard to not be part of the problem, and we do, as an institution, very much understand how important community banks are for the economy.
Can you speak to that? Can you tell me what role you believe community banks play that maybe other institutions cannot?
So community banks are in their communities, so they know the community well, and they know the people in the community and the businesses in the community, and
relationship lenders.
It's relationship lending, yeah. It's not. I told a story yesterday, which happened to me. We were moving to Washington, and we had this big bank wanted to make the loan, and they decided not to make the loan at the last minute. I called the local community bank. The loan officer was somebody that knew my family. They knew the house. He went to my high school. He was much younger, of course, and they made the loan very quickly and they just understood it. It was going to be a great loan. We paid it off long ago. So I understand personally that they're better at doing certain things. The big banks do certain things very well, but they don't do that very well. And
And I
for
would
smaller businesses.
Absolutely, and just want your commitment that you'll continue to take a look, whatever type of additional regulating or regulation tools that are kind of perceived to be helpful to maybe take a look at how they affect banks, and that we make sure that we create conditions where they can flourish.
Here comes the squeeze, baby.
Thanks, Senator Britton. Rest assured, one of the, well, best after yesterday, maybe not, but one of the few things that both sides feel strongly and agree on here is that that community banks play a major, major role in our financial system, and all of us support the community banks in our communities and know how important they are. So thank you for your comments. Senator Tester is recognized from his office.
Yeah, thank you, Chairman Brown, and thank you, Chair Powell, for being.
Sellers out there, all they wanted to hear, sellers are like, I want a correction, and I want 50 BPS at this Senate hearing, and it's not happening.
You hear about unaffordable childcare, and all these are economic conditions that impact hardworking families and small businesses and communities across my great state. And the examples are clear. Hospitals can't hire nurses. Schools can't hire teachers. And if they can hire them, there's no place to live. And even if they can find a place to live, then finding childcare is a problem, and then paying for that childcare is a problem too. Unfortunately, we haven't done much about any of those from a congressional standpoint, but I think all these challenges need to be addressed. But I'm talking to the chairman of the Fed. And so what I asked the chairman of the Fed, housing and childcare, I know you guys think about inflation, but do you think about the other things, and do you have tools to address things like housing and childcare, or is that?
Oh, look at Q's, baby. Look at NDX.
We enforce some of the consumer protection laws, and so we can have an effect as it relates to fair lending and things like that. But ultimately, the bigger question is just the availability of housing and its availability near where the jobs are. There's not much there's not really nothing that our tools can do. The best thing we can do for those issues is to provide an economy where we have stable prices and maximum employment.
So there's been a lot of talk, and I'm sure there's been a lot of questions asked on this committee about interest rates. And I ask this not to influence you, because I do not believe you should be influenced by political forces. The last thing we would need would be the worst thing that could happen is if the United States Senate is dictating monetary policy. We'll leave that up to the pros.
Oh, what's going on out there?
Interest rates continued to be an issue. You are fully aware that the debt deal that was struck clawed back unspent COVID dollars. You are familiar that there are
NASDAQ leaning right now on sell side.
Have impacts on inflation, as I think the
SPY crossing the hourly trigger once again.
And there's some other things out there that I know you're looking at.
All it's looking for now is a test of the HT. Successful testing of the HT. Rocket ship is here, baby.
Or I don't think dropping them would be appropriate, but what are the things you're looking at to make those kind of decisions?
Well, I would say that if we see the economy performing about as we expect, then 2/3 of the committee really thought it would be appropriate to raise rates a couple of times between now and the end of the year. So what do we expect? We expect continued modest growth. We expect
continued modest growth.
Cooling off of the labor market, gradual better alignment of supply and demand, and we expect inflation to be improving. And so if all those things happen, we think we're within a couple of rate hikes of the level we need to get to. We want to get to a level where we're confident that inflation is and will continue to move, is moving and will continue to move down to 2% over time. That's and not a higher level, that level. And so that's why we've slowed down here, as we think we are getting.
Oh, we've slowed down. We haven't paused. We've slowed down.
What factors are you going to look at that would determine a lowering in interest rates then?
Oh, here we go.
So we don't see that happening anytime soon. And the test for that is that we're confident that inflation is moving back down to our 2% goal. We want to have some confidence. So, and I will say in the summary of economic projections that my participants and I filed last week, I think by the end of next year, by the end of 2024, the median participant did have some rate cuts. But that's going to depend on how the economy performs, and inflation has just consistently proven more persistent than we've expected and that other forecasters have expected. So it's going to have to await a time when we're confident that inflation is moving down to 2%.
So I want to talk about regulation. I know it's been touched on. Katie Britt touched on it a little bit. And I know Michael Barr oversees the Fed's regulation actions. But when we passed 2155, the bill to give reg relief to small banks in particular, there was a sentence in there about tailoring, so that even if you had a community bank, a small community bank, if they had a risky portfolio, you could regulate them to match that risk. And bigger banks, the same thing. Can you tell me what Barr is thinking or what you're advising him when it comes to, because I think we've all agreed, the chairman just said, we want to protect community banks. They're not the problem out there. In fact, they're the ones that provide access to capital for these communities so they can grow and an economy can happen. Can you tell me what your interaction is with Barr when it comes to regulation and where you think he's going?
So broadly speaking, when regulations need to be voted on at the Board of Governors, and I'm one of the people who votes, I'm also chair of the committee. So that's the nature of the interaction. Okay. In terms of what you're really talking about, regulation for smaller institutions, I would say I think it's important that regulation be appropriate for an institution's size and risks. So it's not a one-size-fits-all approach to regulation, and the largest institutions need the highest capital standards and the most regulation. And as you get down to community banks, the regulation and supervision should reflect their size and risk.
I apologize, Mr. Chairman, for running over. Thank you, Chairman Powell.
Thanks, Senator Tester. Senator Kramer of North Dakota is recognized.
Thank you, Mr. Chairman, and thank you, Chairman, for being here today. I know several of my Republican colleagues have been asking you about Basel III and the potential for some changes, obviously, in capital requirements. I'm afraid part of what they're trying to do is fix a liquidity crisis at regional banks with a capital fix, which I don't think the two necessarily go hand in hand. In fact, it seems to me, while you've been trying to engineer a soft landing and now have taken a pause, and I'm certainly not critical of that, I can't fathom why the Fed would want to raise capital requirements when we could be facing what's
kind of funny, right? You're hearing this guy is like, you're trying to engineer a soft landing. Oh, wait a minute. Oops. I don't want to try to criticize that. I actually want to crash the economy if possible.
It doesn't make sense to increase capital requirements for banks and individuals.
So I think that's always the trade-off, is higher capital means more stable, stronger banks that can last through bigger crises and things like that. But it's a continuum, because that also means slightly less capital being available and higher price of capital. So and the thing with capital requirements is the answer isn't 0 and it's not 100. You've got to find the right place. I would also say that the capital in the form of the what I've been briefed on is a proposal where the big capital increases are really for the largest institutions, and much less so for institutions that are not among particularly the 8 G-SIBs.
But what's the motivation for that? I mean, you've just articulated the challenge, obviously, better than I did. But why the big, for example, the big institutions? What's the situation that would require higher capital requirements?
To your point, we spent many years raising capital and liquidity standards for the largest institutions, and appropriately so. I supported all of that, and I'm glad that I did. I think it's been warranted, and I think that the large banks have competed very successfully with this high capital. And I think further increases are going to be on the table. We always thought there would be some further increase at the end of Basel III globally, but I think it's going to be on the increases are going to need to be justified.
I'm going to get to another question, but you said something a little earlier that I wanted to get to. In response to Senator Tester, is your interaction with each other confined only to public meetings? Is that?
Not at all.
Okay.
Not at all. No, not at all.
So you try to persuade each other at the water cooler?
I talk to all my colleagues a lot. I'm not one of those people who can just sit in your office all day. I'm popping up and running around. I'm one of those people.
Yeah, I see. Okay. Well, just because in your interaction, it sort of sounded like that, and I used to be in a 3-member, commission, not that regulated.
We have very regular meetings and conversations. Right through the weekend. We talk frequently.
Okay. In an earlier exchange with, I think it was Senator Tillis, you talked a little bit about digital economy challenges, and you're considering some changes to reflect, how quickly individuals can move money. And I think a lot of people would maintain that while you always need to have the foundation to weather the storm, so to speak, such as SVB, you might not even have a storm, but for the fast ability for somebody to spark a run, for example, or to move money quickly. But you didn't elaborate on what kind of changes you might be considering. Do you have some personal thoughts on it, or things that you've been talking about as you're running around talking to each other?
Yes, I'm not the biggest expert on this, but so
that's two of us.
The thing that's clear is that our existing liquidity requirements, they didn't take into contemplation at all the idea that you could have a run this fast. And so there are things that are embedded in the net stable funding ratio and the liquidity coverage ratio that reflect an understanding of how fast a run happens.
Mm-hmm.
And we now learned that, so that's why I think there is regulatory response is going to be appropriate here, not just supervisory. In addition, you would have thought, and we thought, and by the way, this is the board is every bit as accountable as the San Francisco Fed on this, that supervision could have been much more forward-leaning on the liquidity issue than it was. And so we're going to address that too.
Yeah, no, great point, because these guys have heard me use my my soccer referee illustration. If you warn the offender over and over and over, but never throw up a card, they just offend worse the next time. So I think that's an obvious finding, and I would concur with you. But the whole issue of the run itself is also problematic, while not maybe directly jurisdictional to any one regulator. As policymakers and regulators together, we should find a better solution. But I thank you again for your service and for being here. Thank you, Mr. Chairman.
Senator Warren from Massachusetts is recognized.
Thank you, Mr. Chairman. So in 2010, Congress passed Dodd-Frank to make banking regulations tougher and to avoid future bank collapses. And very soon after that, bank CEOs started lobbying for weaker rules. Now, Chair Powell, you also lobbied for weaker rules. When President Trump first nominated you as Fed chair in 2017, you testified, actually in this very room, I think, that you intended to, quote, consider appropriate ways to ease regulatory burdens for the banks. And when I asked you if there were any rules at all, that you thought ought to be made stronger, do you remember what you said?
I think I pointed to the net stable funding ratio.
No, actually, that's not what you said. You said, honestly, Senator, I think they're tough enough. You couldn't point to anything you thought should be tougher. In 2018...
In the event we strengthened the net stable funding ratio.
Well, in 2018, you supported Congress's weakening of those rules. You led the Fed in hacking away at one rule after another. According to the Fed's own analysis of the Silicon Valley Bank failure, you weakened the rules in multiple ways. You reduced capital requirements. You weakened liquidity risk management. You skipped out on using enhanced stress testing for banks with tens of billions of dollars in assets and more. And the result was that the second, third, and fourth largest bank failures in U.S. history, which together required $23 billion in bailout money. In fact, you now hold the record. In a single year, the FDIC has been forced to rescue more giant failed banks on your watch than any Fed chair in American history. Chair Powell, do you agree with Vice Chair Barr's conclusion that the Fed bears a big share of the responsibility for the failure of SVB?
I certainly think that our supervision has been shown to have been lax in not being assertive enough. I think that the supervisors saw the right issues but weren't forceful enough in hindsight. And I think that's certainly a fair conclusion.
Okay. So those regulations were weakened. Those supervisors were clearly asleep at the switch for more than 5 years under your watch. And I'll just say it again. This is exactly why I opposed your nomination in 2017. The decisions that you made, the votes that you took, and the things that you said helped caused this mess. And when you were up for reappointment in 2021, I opposed your confirmation because I believed that your continued leadership would be dangerous to our financial system. And the Fed's own report confirms that. So yesterday, Chair Powell, this committee voted on a bill to help hold CEOs accountable when their actions blow up banks. At the Fed, you are the one who lobbied, who drafted, and who voted for weaker rules, and you were ultimately responsible for the team of Fed supervisors who fell down on the job. Do you
just a heads up here, we are getting some confirmation to move to the upside. Be very careful here. Here, I just want you to note here that Price is attempting to get over the daily trigger. I'm going to show you guys here in a 1-minute chart. Just be wary here. And begin to see it happening once again, right?
Unexpectedly, a large.
We have the first break above, failure, down here, caught back up, confirmation, boom, and we're beginning to attempt to make a run higher. If you see this white line, same thing as before, you see this white line cross and Price stay above, and I really want to see this red line be aggressive. I don't want to see this red line like flattening out, any of that kind of nonsense. As long as Price and this white line begin to cross here, we're getting very, very aggressive here to the upside. Be very careful here.
That's what I'm trying to ask. I'm trying.
You know the sellers, man. Like these sellers, you saw them right. The closes are like wham, see you later. Get fucked, right? They're gonna try to get in here, wham, get out of here. There's a lot of seller rage out there. They want a specific price to buy the SPY, right? You know who these people are. These are, you know what this is, right?
Huge bonuses, and each of them said they plan to keep every penny of that money. And now we have the chair of the Federal Reserve who led the charge to weaken bank regulations, who oversaw.
Yeah, so like right here, you guys want velocity. What I'm always looking for here is mostly 30-minute velocity.
Our banking system.
And what I'm looking for here in this is a 30-minute velocity here. We've got the big shark coming up from down below, right? Delhi is like dun, 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 dun. But right here, you see this bottoming right here. And we're looking for this move. Yeah, we were looking for it yesterday too, right? In that close, I was trying to buy some cheap calls in that close there, right? To see if this is a fake out. And you saw them like slam us down into that close, right? And this is just building and building for a face ripper to the upside here. Try to close all this stuff out up here, so just be careful. If we start breaking above here and sellers are overrun, we are going to squeeze here. And what we're looking for is on a 1-minute chart confirmation, right? You're looking for
easy money for the biggest banks. We can fight inflation.
We don't see the 1 or the 5-minute rolling over, do we? We don't see like this roll happening here in the 1 and 5. We currently don't see price below the 1 and 5. If the 1 and 5 minute begin to eclipse and price is able to stay above and confirm that move higher, you're going to get ready to jump on that trade. And you already can see here, these sellers are like, fuck you, we're not going up, we're crashing, we're in a correction. You were tuning in earlier to the program. I went through the entire thing with you on how you have an edge versus traditional stuff out there. So we're paying close attention to this. And the more time we spend here, right, we talk about this, the more time we spend here, and if price is able to stay up there, That red line comes up, that white line comes up, and you're just looking for that one moment where it begins to rip some faces off. We know that vol is leaving the market.
Revenue, not a decrease in revenue. Unfortunately, we had an increase in spending that exceeded the increase in revenue. So if you spend more money than you take in, you still end up with.
So you're just watching this here, watching this here. You want to see that big explosive move to the upside here. And they're trying to sell you. They're going to try. I assure you right now, they do not want to see this happen. They do not want to see a reversal. There's a lot of money right now that are like, sorry, we're going down to the depths of hell here. We're going to correct. So they're going to revenge trade all of this. You're going to get people out there just fucking pounding for this shit to go down. And that's it right now. That looks like the end of the broadcast. It looks like it's it. Just check this, make sure. It didn't look like, I didn't think that was over, but they just shut the broadcast down for that Fed meeting on the Senate hearing. That's kind of, it looks like they just shut it down. Didn't look like they concluded it, but maybe they did. It looks like they might have concluded it prematurely. Am I wrong on that? Did it seem like they had an actual conclusion to that meeting? It's kind of odd. Yeah. Yeah, it's kind of wonky. I wonder if they had it preset to shut off or somebody's butt hit the stop button or something.
For corporate profits, nor do I believe we must sacrifice a safe.
All right, I got another source here.
For easy money for the biggest.
I got another live source. Hold on.
Protect worker gains. Thank you for joining us, Chair Powell. Today, I look forward to working with you to strengthen our economy. For senators who wish to submit questions, they're due 1 week from today, Thursday, June 29th. For Chair Powell, please submit responses to questions. For the record, 45 days from the day you receive them. Senator Scott has some comments he'd like to make.
Are you sure? I've still got a live feed here.
The comments that I heard during the hearing led to the challenges that we're facing with our debt.
Yeah, I've got a live feed here with Chair Powell still.
2022 was $4.9 trillion, more than 30% higher than 2000.
I think that feed just cut out across YouTube. I've got a live feed of them still.
We should just recognize as a clear fact is that if your revenue goes up, and that's what happened after the TCJA in 2018 and 2019, we had an increase in revenue.
Yeah, I've got another source here for you playing in the background.
We had an increase in spending that exceeded the increase in revenue. So if you spend more money than you take in, you still end up with a deficit.
Thank you. And of course, Senator Scott recognizes that we had a pandemic. The committee is adjourned.
Looks like that one shut off too. That broadcast is done. I got the gavel strike on that one. So it is done. You're right. Somebody out there said it was done. They were correct. I heard that gavel slam. So that is it right now for J-Pow. All right, so I'm back with you here watching this. Give me just a second here. I'm doing a bunch of work here in the background. So what did you guys, let me know in the chat, what did you guys take away from that that hearing today? It didn't seem as rough as it has been in the past at those Senate hearings. We have a bull trigger cluster forming here. We've got sellers up on high, wanting to get that more down, right? We've got to the downside, we have S1, S2, S3 at 433.85, 432.73. We have the JPM collar that I think is right here. I could be wrong on this. I've got my price target down here at 430.15. I really want to. We've got the daily trigger down below. Even that, it's I believe right around 427, 428. And you've got sellers that want to get down here. And that JPM collar does, to some extent, act as some kind of a magnet that could keep us range-bound trading into end-of-month flows. Of course, people waiting for the end of month. It is kind of a magnet here. And then we've got the attempts every day for a squeeze trade to the upside. We also know something else, that if we don't get a green Thursday, normally we get a green Thursday. And if we don't get the green Thursday, that the probability of a massive green Friday is huge. It's like 85% of the time, 90% of the time. This is generally a green Thursday. And if we don't get it, we tend to get a massive move to the upside by Friday. Now, a note here, too, is that Winky had made a comment that I believe Larry Williams said, look for a 2-day short on Thursday and Friday. I'll be right back with you. Remember here, bulls do not have a trade. They do not have a trade unless they get above with a confirmation above the hourly trigger. You have to have a rip higher, confirmation, and begin the move higher for buyers to be in control here. So I'm going to show it to you guys really quick. Buyers need to get above the hourly trigger right here. They need to get above it, and they need to get above it. It's a 1 minute chart. Yeah, it's good. As of right now, sellers are in control. Sellers have also had one confirmation up, one rejection here, and they're just looking to get underneath and get this white line and this red line for a cross to go to the downside. So right now, sellers are still in control. Buyers are not in control until unless price gets above the hourly trigger with the white and the red line above. Otherwise, sellers are still in control here. Oh boy, these fucking hedge funds, man, they're just like, I want to get paid. I don't care how I get paid. It looks like it to me. Looks like they're like, I don't care about where you're going. I want my money. Just a recap here on Jerome Powell. Powell saying that the Fed doesn't see rate cuts happening anytime soon. He does think that they're within a couple of rate hikes of the level they need to be. So they're not trying to get above the rate of inflation. They feel as though the rate of inflation is going to come down and meet the next couple rate hikes. They're close, but still not there. Powell's also saying a strong majority of the FOMC sees 2 more rate hikes. My forecasts are very similar to the committee's forecasts. So nothing else to see here. Nothing has changed since his message during the last rate hike decision. I was going to look through and see anything else. We do expect the unemployment rate to go up a little bit, but that's still not negative. As long as we have, the key point here is whenever you hear some stuff like that, you got to take into consideration 2 other points, right? The jobs available, of course, employment rate, right, and the unemployment rate. They kind of go hand in hand in this discussion. So if you don't see anything else that was said by him that was important to hear. Squeezing right now, looks like the hedge is coming off. I'll be honest with you, I don't know, like, what else we got? PCE? He did say in that meeting, they were questioning him about PCE, and his statement to that was that we're seeing progress in supply chains. We have not seen much progress in services inflation. I agree with that. I think all of you can agree with that. That I was just looking at a post last night. Some person had bought a kid meal for a child and a small fry or something. Had like 6 different fees on it. Yeah, meeting is over right now. Meeting is done. The only other thing, I don't think we have any events on Monday. It's kind of fascinating because we've got, let's look at the calendar coming up. We don't have anything for, let me look at the full calendar. So let's just review it really quick here. So tomorrow you have the big one, of course, is PMI, right? Services and manufacturing PMI, those are both at 8:30. On Monday, there's nothing scheduled. Remember that this, too, is the week that we head into the 4th of July weekend. You will have a slowing of market activity as we head into that Friday. We're going to tell you right now that some people are gone. They're already on vacation. As we head into this weekend, I shouldn't say that. I should say as we head into this weekend, you'll see people begin to leave on vacations. Most people with money, they're gone for like a week, 2 weeks during 4th of July. Some people are only gone for a week, but they will be gone at least by next Friday, right? So not this Friday, but next Friday you'll see people start to exit the market. Flows should slow down into that Friday. Traditionally, they do. Winky also made a note that historically on the week, so like the Friday of 4th of July into July 5th, retailers take over, right? You know that. Flows slow down and retailers have a party. And it's just like, it's usually like, you guys know how like between Christmas and New Year's, everybody's on vacation. And it's not real, but you know, you're like, oh, the retail bulls took over and they ran the market up. And then we come back on January 3rd and we pound it all back down again. And so there's some hope for that. I'm sure that there are retailers out there that'll be discussing that, anticipating that, and that happens a high percentage of the time. It's like 87% of the time. So you have to consider that into end of month, into next Friday, right? So and then we got end of month flows into Friday, right? So there's a bunch of stuff going on still into the background. We do see, you may not see it, I see it, a lot of people see it out there. We're not getting the downside move in cash market. We're getting it in low liquidity environments. We're not getting it in RTH. I mean fucking 9:30 until 4 p.m. You're not seeing it. Sometimes you'll see it the last 15 minutes or so, but you are seeing the demand is still there, right? In cash market, there's still inflows coming into the market. And you also got people want a certain price, right? People want to cool down, put some time, let the market cool down into end of month. You've got big money that's trying to come into the market. You can see it. You can actually see it every day. There's large flows entering the market right now. These aren't retail flows, hedge fund flows, speculator flows. These are bigger participants are entering this market, whether you like it or not. Whether price goes down or not doesn't matter. You can see these inflows coming in. They have to chase. Already know they're going to have to chase the second half of the year. They're gonna want to make it look good, right? Have a good year one way or another. They missed the entire first half of the year. And then you've got people that are going to be waiting, right? People like me, like every quarter, each quarter, as we come into the end of that quarter, we just finished. I know this seems like it was a long time ago, but we just finished OPEX, right? Quarterly OPEX. I know it seems like it was like 2 months ago, but it was only last week. So like we just finished OPEX. The quarterly trade is being wrapped up by most people. Any large positioning, most of us are out and looking for the next dip to put size on the market, right? Looking for that end of month to find out what to do for next quarter. A matter of fact, 2-3 weeks ago, I think I was saying to you guys, yeah, you'll start seeing people exiting the market, taking profit, and looking for what to expect in Q3, right? So that's big news. Like as we come into the end of month into Friday, people are going to be looking. People are going to be like, I want to know what the JPM collar is for the next quarter. I want to know what the top target is, the bottom target. Have they raised it? Have they lowered it? Is the same? Are we going to do the sideways and up trade into Q3? Are we going to go down to the depths of hell? Is there an expectation that we're going to the depths of hell in Q3? You may not care, but I know that there's real traders out there that are like, I want to fucking know. Are we going sideways? Are we going sideways and up? Are we going up? Or are we going down for Q3? And they're going to pay attention to that shit. So they're going to be looking for it to make some decisions on what to expect. You'll see people in the stream asking, what does these strikes mean for us for Q3? And the market will digest that information. There's some good plays on that too, on those end of month flows. What's one of the fascinating parts here is that it's kind of neat. So on Friday, the 30th, mark this down on your calendar, write this shit down. But on the 30th, if they put some heavy hedging on the market, if we get heavy hedging in the morning, a lot of these banks, what they do in these end of quarter cycles is they will sprinkle in 0 to 8 calls so to not disrupt the market. So you'll get these disruptive flows into the end of month or end of quarter. You get disruptive flows all day long, and it's to not disrupt the market. So they load up on these fucking 0 to 8 calls, and at the end of the day or whenever they're done with their flows coming in, the fucking market just rips faces off into the bell. Not all the time, but enough that you pay attention to it when it does happen. So that's another date to look forward to this upcoming Friday. Or not upcoming, next Friday. That is the 30th. So you've got end of month flows. You've got JPM collar for the next quarter. You've got the 4th of July weekend. And you likely have some kind of a face rip and rally at some point on that Friday on the 30th. Let's look forward to this. Is all economic calendar stuff. So next week. So this week we've got coming in tomorrow morning. PCE. If those numbers are good, we're fucking going to the moon, right? If we don't go to the moon today, we're going to the moon tomorrow, one or the other. I don't care where fucking price is today. And then so next week we've got the Fed budget. Excuse me, I got that wrong week. We got nothing scheduled for Monday. On Tuesday we've got durable goods at 8:30. We've got Case Shiller at 9. New home sales, consumer confidence at 10. Wednesday, we've got U.S. trade balance, retail inventories, wholesale inventories. Thursday, we got national job claims, pending home sales for May. Friday, we've got a PCI, PCE index on the 30th. This is all on the 30th, by the way, the same day we get all those flows. Core PCE index year over year, PCE, consumer sentiment. And then what's crazy is right now we've got no news until I got these wrong. I got these fucking wrong. Hold on a second here. God damn it. Hold on here. Screwing this all up. Hold on one second here. So let me get this right. Or maybe this calendar ends right here. Closing doors claims on Thursday, Friday PC, and then that's it. That's all I've got. Let me go back to I've got no other reports for July right now for the 5th, so I'll take a look at that later. So that's all I've got for you is into the end of a month. So just on that, staying on that same topic, the question becomes: are we moving up here? Right? Are we moving up into next week? Are we going to pin to this JPM collar? Are we going to close all of this stuff above? So let's take a look at that. So I got some airflow in here. My HVAC system is not enough to keep this place cool. So let's take a look at a higher time frame here. Now, there's not much left, right? There's not much left here for the bears. And you can see we're turning, right? We're turning here. I want you to look at this in a 15-minute chart. We're turning to the upside. You can see, hold on here. Let me get rid of this. So for all that bluster, so let's look at an hour chart, right? This is what the bears are looking for, right? What are the bears looking for? Bears looking for an hourly trend to the downside. They're looking for a bear. 1 to 3 weeks of down. And what's going on here? We're getting a little turn, aren't we? Getting a little turn here. Do you see it? That hourly that was looking extremely bearish here. Not happening, is it? It's coming up. It's a reversal to the upside. All that stuff going away, right? Look at that. What does that look like to you? A rip your fucking face off rally is what it looks like to me. Looks like we want to close a bunch of shit to the upside. I want to see fucking 439, 440. I want to see 441. I want to return to the scene of the crime by Friday at 442. And next week, we can pin back down there, hopefully. So let's take a look into next week here. I already know what we're doing here. I already know. I don't want to say it. We got the JPM collar pinned down here, right? So what do we got going on? Where's the 30th? What do we got over here? There's 6:30. Boom, right there, right? It's going to go down after July, man. It's going down July. When is it going down July? Probably not till the 5th. Okay, so what are we doing? Where are we going until we get that? What about the pin down here? So some things we do know, though, isn't there? There's some things we know. We know that we've got sellers up here. We know where they are. They're right there, right? You shall not pass. Double top, bro. That's the top for the whole entire year. You ain't never getting past this. I'll tell you where the sellers are right now. They're right fucking here. And if we break through them, you know we're trading, right? We're trading this right here. Trading all this shit right here. Something like that. Maybe we have like a Volpocalypse or some shit Wednesday and Thursday. Come deck down here, see this JPM collar maybe. And there's your like Friday rip faces off into the close. So I don't know, man. I gotta tell you, man. Right now we're trading this. This is what I want to trade to. I'm a bull. I'll be honest with you. I'm a fucking bull. I want to go way down here. I want to grab that shit. Maybe we can get a nice Volpocalypse into Wednesday and Thursday heading into fucking into the end of month, and we'll tag this JPM collar right perfect. Right in there. Right for the 30th or something. We get that big squeeze. But for right now, price action is dominating, right? What matters JPM collar does not fucking matter, does it? Price action rules no matter what. So right here, right now, what's going on? Oh, shit. Sellers losing control. Gaps up high. Bunch of crap up here needs to be solved. We know where the real sellers are. They're up here, right? These are the guys that miss leg day. And they're like, and we also have like crash bears, correction bears. They're just like down, down, down. I want a correction right now. Next window of weakness. Remember we talked about the window of weakness between June. I said June 20th. Excuse me. I said June 20th, June 23rd. You get a window of weakness. I said limit your expectations to the downside. So that's pretty. You did good job, Bears. Good job, sellers. So this is their last chance, right? If I'm wrong, they will sell this right now. So if I'm wrong, I will change my opinion. You can say Captain Jim James is wrong. So you get your window of weakness, right? Today is the 22nd, 23rd, 21st, 20th. Window of weakness. Bam. 1, 2, 3. You got one more day. I'll give you one more day. The options market at least was giving you at least one more down day. Doesn't look like you're getting it right now. You better sell this stuff because these buyers in cash market are looking to rip your face off. Even if it comes back down in the overnight, they're looking to take this and clear out all this garbage up here. So either today, right now, into this close, or tomorrow, expect a pretty significant upside move. Saying that, you don't have a trade as a bull unless we get above that hourly trigger and confirm it. Like you need the big old green bar. Bam. Get that big old push. Come back down. That'd be a red bar. And then you get the boom green bars. And you're like, woohoo, we're closing all that shit up. Yahoo, baby, into Friday. Now, where can the sellers re-enter this market? Their next try is going to be somewhere up here at 439.47, 441.03. They could be lower at this point. They could revenge to trade this and all that. And then into next week, I'm going to have some expectation. I do have an expectation to hear that because this vol is gone, unless you get some kind of bullshit news tomorrow on that PCE. My expectation is in a Friday. We're going to try to take that shit out, and then we'll probably trade a sideways range and down into, I believe, Thursday or Wednesday, Thursday. And then Friday, we'll get the end of that end of the month flows, and we'll get some kind of a relief rally up into the close, and maybe go back to attack real all-time highs onto the 5th of July. But right now, not looking good for sellers. You ain't got shit to say, man, if you're a seller. What else you got coming up? What are they talking about on FinTwit? I want to know what they think they have here, because I didn't hear shit today that was bearish. If I was a fucking bear, I'd be like, all you want to hear Jerome say is we're not going to raise rates anymore. Because there'll probably be a big liquidity grab, probably be a giant liquidity grab, and then bloodbath down to 3,500 or something. Like 45 minutes of straight up and then a fucking violent move down. Remember, too, people are out there saying, people are comparing this. Let's look at a big old chart on SPX. I saw them out there yesterday. They were comparing this shit I saw them out there yesterday. They were like, yo, dog, remember that down there? Remember that down there? Remember that down there? We're going to do that right now. I saw that shit. I saw it. And right now, it ain't looking good for you. It's looking like that, baby. So, we'll see. You're on the cusp, bulls, and you're on the cusp, bears. Look at that. They don't even want to give up trend on a daily trend on a 6 EMA. They don't even want to give it up to you. Look at me. I'm a bull. I'm like, come on, just come back down to, give me 427. I'm like, just come down here so I can buy a dip in safety. I want to put some size on down here. I want that next leg up there. These fucking bulls are like, get fucked, buddy. We're going up here. So hopefully we can get some downside maybe in a month. Maybe July 15th or something. We can come back down here. I don't know, mid-July. Maybe we can get a week or two of window of weakness. Like July 15th, July 5th to July 15th, maybe. You're losing it right now, sellers. Play a little ping pong in here. Let this come up here and meet the fucking buyers so they can take this for the next leg to the moon. This still also means I can't put size on the market. That's the crazy part. Like you guys need like sellers need like JPM on their side. They need something. They need something bad to happen. Sellers need like really. Oh, here we go. Here goes the bears. They're like, why are you selling? Just because. Look at them. They're terrible. They just want to sell, dude. Like sell, sell, sell. We need a market crash. Bull party over. Look at them, dude. It's so stupid to watch. Like they need a reason. I don't know if they have a reason, man. I don't see anything out there. Give it like outside of auto, let's just bring it down so we can go higher. I don't see any fucking reason out there for sellers to be like market crash. I don't see anything. Nothing structural right now for selling this market. Other than we need a better price. Let's cool this shit off. So I don't know. If you're a seller out there, give me a dip to buy, man. Get me down to fucking 427. Get me down to 412. Give me that. Give me that today. I want it right now. Anything you can do to get me down at 427, 412, so that I can fucking go big. Like anything you got, give it to me. Otherwise, hope and pray, man. We need some bullshit news. We need we need J-Pod to just threaten or something. I don't know. We need something bad. Yeah, I don't know, man. I'm trying to think of some reason. We need something. We need like fabricated. I don't know, commercial real estate crisis. Something. Because the more time we spend sideways like this, right? That fucking white line on the daily is coming up for you. It's like a big fucking shark underneath. And all it's doing is saying, fine, stay there. Like you trade this bullshit range. As days pass, I'm coming for you. Like time is not on the side of a seller. Like sellers need down, 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 down. They need it bad. And if they don't get it, as time passes, this shit's coming for them. Yeah, I'm telling you, man. There's going to be some buying tomorrow too, right? We know that. We know if we don't get it right now, if they pin this into the close, it's going to rip some faces off. So I don't know what else to say to you on this. It's hard here for a seller. It's a hard place. You're going to get trapped in this. I guarantee it. I guarantee at some point you're going to get trapped. If you're a seller. Now you've got the clock ticking. Time was on your side. Clock is now against you. And we need something. I'll be honest with you, like 100% honest. I fucking want a gorgeous dip to buy. I want to buy that fucking yellow line so bad. That orange line. I want to buy that orange line. Because I love that buy is like fucking money, man. It is fucking money. So I'll do anything to get that buy, but you know I'm not in charge of that. You're not in charge of that. We're just not. We're not in charge of that stuff. So if they can mechanically draw us down in the nighttime, right? That's the only way that I'm seeing it. I was trying to measure the down move, and I'm like, this is all fucking nighttime stuff. Like, they can't even get the shit down in the daytime. It just recovers. So the only thing I can say to this would be pin it into the close. Maybe you get some more downside in here. And then that relief rally during the day on Friday, possible. That's all I can think about. But it's not bearish. You guys know what bearish looks like, right? Bearish is like we're selling fucking cash like crazy. Real money selling by large institutions. And that's what you need. That's what a seller needs. They need large institutions hitting the fucking sell button. The largest portion of this market to just start selling hard and heavy. You know, a little bit of that with like a salad bowl, right? You get a little bit of that real money selling. You get a little bit of action from hedge funds at the close and at the open, and then you got a sauce that you can make for some significant downside moves. You can just run over the fucking retailers. Fucking, you make the dealers chase. You get an amplified move down, and it's a beautiful fucking thing. So I just haven't seen it yet. And if it happens, fucking do it, man. I'm down. I want you to do it every month. Every month I want you to do it, and every 3 months I want you to do it, so I can take a fucking long for this whatever this market's going to be for the rest of the year. Yeah, this is their last chance, man. This is like do or die for bears. Like this whole area here, this whole thing right here is their last chance, and the clock is ticking. They don't have a lot of time here, so they got to do it. Like, need a reason to sell. Even if they manufacture, I don't care. Like, you got to have like a reason. Or if it's mechanical selling, that's fine too. Like I'll even go with no reason. You just sell and make up some bullshit excuse. Because if they don't, right? If we get above this hourly trigger at any fucking point, I promise you, we get above this hourly trigger, that shit is on like Donkey Kong. It is on to the upside.
The US
On.
$19 billion of 5-year.
It'll be relentless.
Of 2 to 34 and a prior high.
All that bullshit, like 10 contracts selling in these hours right here, like all this stuff here, this is all scam selling down here. We'll close all that in like minutes. You need real money selling in cash market. Size selling. Size. You need that. So, all right, that's all I got for you. I'll be right back with you.
At 1 p.m. Eastern Time, the US sells $19 billion of 5-year tips, prior bid cover of 2 to 34 and a prior high yield of 1.32%.
I'll be right back.
Shortly expecting the results of the 5-year tips auction. I'll lead with the 5-year tips bid to cover ratio.
This stream is sponsored by TickStrike. TickStrike allows you to actually hear order flow in futures, forex, and stock instruments. Get a free trial at tickstrike.com.
When issued 5-year tips around 1.87% ahead of the $19 billion reopening.
You can see they're trying to pull a rug right now. Keep your eyes right here. This looks like a rug pull setting up right now, so just keep your eyes on that.
2 to 56, 2 to 56, high yield 1.83.
You will notice that sell side will want to get paid. Let's be careful of that right now.
The US sells $19 billion in 5-year notes and awards 22.41% of bids at high. Primary dealers take 3.87% of US index 5-year note sale, direct 11.03% and indirect 85.1%. 103 counterparties take $1.995 trillion at the Fed reverse repo operation.
This stream is sponsored by To The Tick. Get free daily pivot points, Fibonacci, and market profile levels by signing up at tothetick.com.
All right, give me a second here. I'm showing up here with you guys. Just a minute. Give me a second. All right, let's take a look at some tickers here and see if we can get any action. I saw someone commented that they're getting sleepy. We'll take a look at some stuff here. P-Core. Take a look at P-Core here. There's a 5-minute chart on P-Core. This is PCOR. Get rid of this here. Looking for something to trade. P-Core, this morning, brought this one up to you earlier this morning. They've been trending all day long. Bam, bam, bam. Looking for that next move higher to close out 65.50. So PCOR trending all day long today to the upside. I think I brought this one up to you earlier today. You can see that nice, beautiful bounce this morning. 1, 2, 3. You can look at this one for a target high to close out the gap above or even fail to close the gap above. There's one right there for you. P-Core. Quick 5-minute trade for you. Try to get up here. Nice, beautiful bull cross on it. We'll take a look at it over here as well. PCOR. It's coming into some resistance here. I want to show you something here real quick. So P-Core. We want to see a break above. So this is the edge, right? You're always looking to have that edge. And see P-Core had a beautiful bounce down on its daily trigger, traded all the way up to its hourly trigger. We want it to get above, what? We want it to get above 64.73. If it can get above 64.73, it's going to go up and attack 68. So 64.73. Take a look at that right now. And here is 64.73 right in here. This is an hourly trigger. If it gets above this right here, this little green box, if we can get above this here, the target to the upside, we've got 65.60. This is your first target right here. Your second target is 68.01. Woof. Way up there. 68.01. Wait till you guys get this shit. You're going to be so stoked. You're just looking for this break above right here. If you can get above this hourly trigger right here, you're going to be looking for bam, bam right there, bam, and then bam up here to 67.85. That's P-Core. Any break below this right here, trade is dead. You can see that one right there, P-Core. Been trending all day long. We'll take a look at a few others. GTLB. Another gorgeous bull cross right here on GTLB. So let's take a look at that one next. GTLB, actually very bullish. It's already crossed its has a 3-trigger cluster right here. It's sitting right above its hourly trigger. This one's ready to go. It's got nothing above here. It's going to go up here and try to close this gap above. Very bullish right now. Looking to close 49.31, the gap here, and have some continuation higher. As long as GTLB is trading above its 27 EMA on a 5-minute trigger, it's going to try to head up here and start to rip through all these previous. All this garbage up here, all this garbage up in here. Very bullish right now as well. Double bottom down here, sitting above its hourly trigger. Very bullish stance for it. I bet we could sit here right now and watch it start ripping some faces off. Next one we'll look at, ALGM. This one, unsure about this one right now. We'll take a look at it on another chart. ALGM. Allegro. Yeah, I like this one too. I still like this one. This one's going to come from down below, so 41.58. 41.58. Right down here. This one's hourly trigger. As long as this one keeps above here. There. Oh yeah, dude. We've got all, see right here? I don't know if you can see this right here. My cursor is my cursor's previous high at 42. And I believe that's 60, 42.81. This one's trying to explode to the upside. If this one starts to break above here, 42.81 gets up here. Trade is alive as long as we stay above that 41.50. We'll start looking at higher time frames here, and just look at what that's looking to close. If we can stay above that green bar is right here. If we can break up here, we got a bunch of targets up in here. Got a target at $44. Got an even larger target up here at $50 for it. Very bullish, right? Just keeps getting bought. Bam, bam, bam. And you know what they're looking for, right? Go on up there and close out that previous high at 48.69. Trade still the upside, though, on AGLM. I always like to stay above the 5-minute on the daily, though. So just right here, as long as we're above the 5-minute, you're going to be attacking to the upside. That trade is still alive and dip buying down here at 41 and some change. ALGM, excuse me. ALGM. Next one is BRZE. BRZE. And we got a nice little bull cross down here. Look at that sexy 5-minute bull cross right there. Woohoo! We want to see this hold right here, right? So this is BRZE. Take a look at this one right now. BRZE. It's sitting right now currently directly on its hourly trigger. 40.78-ish. Somewhere in there. 40.78. So right here. Sitting right on it right now. This is the setup. So this is a 3-trigger bull cluster right here. 1 minute, 5-minute, 1 hour trigger. You got the initial impulse move up. Boom. Consolidation. If this thing starts to run to the upside, it's going to go up here and close all this shit up here. And it's looking to close some major highs above. It's looking to close, what is it looking to close? 41.82, 42.46, and try to even get close out a bunch of stuff going back in time here. Let me take a peek on a higher time frame here. Oh, yeah, baby. This shit's got a lot of room to run here. This shit's got a lot of stuff to close out. It's got to close out 43.73, 49 and change. Looking for $50 basically. And then we've got higher. Dude, if you get to $50, then we're looking for 61. Then we're looking for 77. And then we're looking for like $100. So this one's primed and ready to go. To the upside right here. Take it piecemeal. You got targets up here. You got targets up here. As long as it stays up here, it's very bullish right now. So BRZE. We'll take a quick look back at the SPOOs and see what it's doing. And SPOOs is getting all spun up to go to the upside. We'll take a look at another one for you. So we just did BRZE, ALGM, GTLB, PCOR. We've got some more for you. We'll take a look at Unity next. Kind of looking like garbage down here, right? Doesn't look good at all. We'll find out why that is right now. So you've got, hold on a second there. Unity. I bet you the Unity crowd out there is like, man, we're going to crash. Almost guaranteed, right? That's what they're saying. Hold on here. Where is my, hold on here. Getting some weirdness going on. Getting some wonkiness going on in the background here. I bet you're thinking, like, Unity's about to crash. That's what I'd be thinking looking at that shit. Be like, it ain't done going down. Give me a second here. 3-minute chart. Yeah, you know, I'm not particularly happy with Unity right here. This is what I'll say to you on Unity. 3862. Keep an eye on it. If it 3862. Like right now on a 5-minute chart, it looks bearish here. It's got the bear cross. I'll draw this on though. Keep an eye on it. Maybe make yourself a I know it seems like it's bearish here, but I don't think that it is. So your first target there is 39. You can get above this here, this $38. Your first target's 39.71. And in all actuality, you're looking for some bigger numbers here. 43.72. Keep your eye on this one because this one could reverse here. The stuff in the background saying keep an eye on it, that it could be going up. It could be primed, ready to go to the upside. Yeah, definitely it is. So just watch this one right here. You can't take this trade unless you get above this green box right here, but keep an eye on it. That's Unity. It's telling me it's going up. IoT. Samsara, yep. That's the one. Oh, look at that beautiful thing. Woo, doggy. You got yourselves a gorgeous 5-minute bull cross right here from the open this morning. It's been trending up. It's coming back down to test. It's 1 minute, and it's a 5-minute 27 EMA and the 129 EMA right now. As long as it stays above here, it's going to keep going higher. So we've got IoT. Let me take a look on the background and see if it's saying anything. Any magical dust back there? Gonna try. Oh yeah, look at that, baby. Oh baby, 27.73. As long as it stays above that number, it's going higher. 27.73. So right here, boom. As long as we stay above right here, even if this is consolidating, as long as we stay above this 27.73, expect some more face rippers to the upside on this one right here. So that's what your number is right there, 27.74, 27.73. That is, let's go back and look at SPY real quick. Where's the SPOOs? Oh, what's it doing, dude? What's it doing? Is it wanting to go? A lot of shit in the market saying it wants to go. A lot of underlying stuff saying, a lot of risk on stuff is saying we're going to the upside. So SPOO's telling you no, but some risk on shit, some speculative growth is saying we're going up. So we got IoT, just did that one for you. Let's go to the next one. And we got IoT. CRDO is the next one. CRDO. Oh, this one's looking ugly, right? 5-minute chart. Look at that. This is like classic distribution pattern, right? Look at that. Oh, man, this one's going to crash. Like, just look at that. Like, classic distribution pattern. Let's bring it on down. Let's get some selling on. CRDO, right? Doom on CRDO. Let's take a look at it and see if it's actually doom or not. Yeah, kinda. Well, it is and it isn't. You've got a daily trigger down below at 1504. So right down here you got a shark coming up. It's kind of way down here, 1504. And you're not trading above your hourly. So I will say this. Oh, we'll close that up. This one might be bearish. So this one might be for sell side for the bears. What do we got here? 1810. As long as price stays below 1810, we could get a move to the downside here. Preferably, I would like to buy it down here. That would be my preference, and then ping pong this, and then a move higher. Now, with that said, if price at any point gets above this $18.10, a little bit higher there. Price gets above right here at any point, it's going to do a big giant move to the upside and restart that whole grind that it's been doing here. This whole grind will just continue. I know you might be bearish here. I can see that you're probably like, yeah, fuck that one, Cap. We're going to sell that one to the moon or to the depths of hell. We're going to get you a better price, Cap. Just be careful because this thing has like said that in the past, and then it comes down here and it's like boom, bought it, and it's like boom, boom, and then boom, we're going up here and ripping some faces off. Just be careful on this one if you're bearish. CRDO. Keep your eye on that one. CRDO for the upside move. Stock screener is a bullish stock screener, not a bearish one. SoFi. What's SoFi doing? Everybody likes SoFi, right? SoFi looks bearish as fuck too, doesn't it? Like, just look at it. That's the top, Cap. That's the top. We're going down. This is your first leg down, then bloodbath to the downside on SoFi. Bet you all the SoFi bulls are out there peeing their pants, all scared. So SoFi crowd's like, no cap, don't do that one. I want cheaper prices. And I'm like, yeah, I get that. SoFi crowd wants to buy. They want to buy 1, 2, 3, maybe $8 down here. Right down here, they want to buy $8. But saying that, so maybe a double bottom, right? Slam down, and then we're off and running, believe it or not. Now, saying that, not shockingly, SoFi is parked right on its hourly trigger right now. So though we can go down here and catch these, it's literally sitting on its hourly trigger right now. And if it holds this, the market starts to go up. This is going to be a trap for bears. We will look for a move to the upside and start. Hold on a second. Wrong one. So this looks extremely bearish to me. And I'm like, do I have an edge here? Can I sell this down? Right? Then you get like all these bears come out and they're like, we're selling the fuck out of this. And then we get like, boom, hold on, whoa, that's wrong. Boom. And then we just start going up there and cleaning some shit out up there. You just clean some of them bad bears out over there. That looks like this does not look good, but market starts to go higher. SoFi falls along. Whatever you do, if this breaks, if we get anything like this down here, you get any kind of like blood down here, and then we go like this, you will end up getting some downside movement. Oh, I'm missing something. So right there. Thank you, Winky, for the update, brother. So SoFi. Next one we're going to look at is Sound, S-U-N-E. Or S-U-N, excuse me. And the S-U-N is Soundhound. There they go right there. Look at them. They pumped all morning, right? Called this one out earlier this morning. Ripped faces all day long, slamming up here. Right, come back to check their 1 minute. As long as they stay above 419, there's not over yet. I think they're done for the day, but they are still alive as long as they trade above 419. Let me take a look at them in the background, see if they got anything going on. S-U-N. They might be done for the day. Let me look. Nope, they're not done. 392. So 392. I would prefer another pullback, like let it breathe. Come down here maybe. I'd prefer like a breather down here, like just come on down here, come down here, do a check, scare everybody, and then bam, they're off again and running. Just keep your eyes on Sound for another dip buy. If it stays above 419, it's just gonna keep fucking ripping. It's not done. It's got a whole bunch of shit to close out on the upside. This ticker has not stopped, just so you know. It started at $2. We called it out at $2.50. It has not fucking stopped. Been nonstop. It's at 423 right now. It's looking to trade 523, and it's got way more highs to go in the background here. Once that when it's over $5, it's going to try to trade $8. So SOUN. It's going to try to trade $8. Then we're going to look at SMRT. SMRT. Woohoo! Ran all day long. Talked about this one. Boring market. Fuck no. Not for SMRT, just ripped faces all day long, never stopped. Just kept on going. SMRT called that one out this morning. It's up 1.5% or 1.57% in the day. Let's take a look at that one in the background. SMRT, boring market. We get another one here. Let's see here. Come on down here. See what this one's doing. What's this one look like? Oh, yeah, baby. This one, ready to go to the fucking moon. Right, SMRT. SMRT is sitting on 2 triggers right now. You ready? Explosive. You want to see an explosive move? I got one for you. $3.34. $3.34 right here. Bam. That's the daily trigger. Right? Boom. Right there. Right on the day right here. Hourly trigger. Sitting right down here. $3.42. Right here. Boom. Right there. Boom. Hourly trigger. Bullish. Just been grinding, baby. Price trading off the fucking chain on the 6 EMA. As long as it stays above 351, it's going moon time. It wants to trade like $3.80, $4, and it's going to go way higher. We're talking like $8, $9, $10, something like that. They want to close out a bunch of shit at like $5, $6, $7. It wants to go 100%. SMRT cranking. Super fucking bullish. SMRT. Super, super bullish. What is SPY doing, baby? Is it trying to recover? How many fucking times are you going to try to sell it, bears? 1, 2, 3 in cash market every fucking day. Can't get it done. What are you going to do? You try to tricky dicky over here? Is that what you're going to try to do? Some tricky dicky into the close and get your lower numbers? You going to try some more tricky dicky? How much more time do you need? How many days you need? You need a whole week? What do you need? It's like set up for you. You got J-Pow, 2 days. What do you need for vol, man? I don't know what else you need. Where's your vol, bros? Where's your correction? You gotta manufacture some start manufacturing some shit. I don't know what else to say to you. I mean, you had it. What else do you need for a downside move? He would have done it for you. What are you doing, bears? You know what this yellow is here, right? You know what we're trading if we break above it, right? Up here, baby. Up here. This is the bottom. It's not at the top. There'll be bears. I mean, I'm not bears. There'll be fucking bulls right there. You know what they'll say to me? Should I take a long hair, Cap? And I'll be like, did you take a long over here? And they'll be like, fuck no, Cap. Too scary. But it looks really bullish right now. What's happening over here? I guarantee you there's bulls that are scared shitless here. And I guarantee those same bulls will be here. Fucking guaranteed. They'll be like, Cap, I want to take a call, man. And I'll be like, where do you want to take it? And we'll be like, well, we're trading 443.13. It's looking really fucking bullish. I'd be like, I don't know, man. What do you want to say? I want to take a break, dude. I want to take a day off. What's going on, bears? What do you guys? It's looking pretty spicy right here. What are you guys expecting this week? What do you got for news? We've end of month flows, Cap. We got the pin, Cap. I'm like, yeah, I get that. Are you going to staircase us down in the overnights? Is that what you're going to do? We're going to make bag holders, Cap. That's what we're doing right now. We got one more day of window of weakness. So there you go. I just went through a bunch of tickers for you. A second time for today. Most of those tickers have been trading up all day long. They should continue higher for you. We've got that nice little, what's going on over here in the hourly trend to the downside. Man, and you see that shit flattening out? You see that, Winky? Let me bring it up for you. See that? You want to see something here? You guys want to have a little insight? You see that red line on the hourly going flat? You see that white line on the hourly going flat? Flat. You see what happens when that red line and that white line are going vertical to the downside? You see that? You see that vertical down? Yeah, kind of vertical down. See that vertical white line starting to go, wait a minute, I'm going flat now. Spend a little bit of time around here. Maybe a viable dip bottom. Maybe not just yet, but you start seeing the turn. You're like, hey, Cap, can I buy that dip? And I'm like, this one right here, man. This one right here is going flat, bro. This one's flattening out. This one's not vertical down anymore. In an hourly trend, man, they were trying to trap some bulls, dude. They were looking for a correction. It's just a relief rally, Cap. That's all it is. It's a relief rally, bro. You're going to get a relief rally up here. You're going to fail at the new high, right? And then that's your double top, bro. And then it's on, bro. Correction on. So I don't know, man. I don't know if I was sell side here. Go check on your collapsed bear friends. They're going to tell you that they're coming off. They're leaving you bag holding for a relief rally. Whoa, what's that? What's going on? We're making a turn, baby. Who wants some puts? Alexa, I didn't say your name. Alexa's a bear. Alexa's like, you want some puts? Okay, so I'll be back with you here in just a moment. I gotta get right back into what I was doing in the background. I'm trying to hook up Discord to the website, and I'll be back with you. Oh, by the way, don't forget to like and subscribe. Don't forget to tell your friends. Do me a solid if any of this stuff is helping you out there, and try to support the stream. I'm gonna let me see here. If you want to directly support the stream, here you go. Copy, cancel. I'm gonna send you a link here to YouTube. Thank you for all the support. I really appreciate it. The supporters of this channel help keep everything going. We are beginning to squeeze higher now. Trying to get above, right? Looking for that nice little, move this thing back. What's going on, Bears? Looking for that confirmation. We're looking for that white line, that yellow line, that red line to come higher. Start squeezing up and slam into 436.50. Get ready, man. Get ready for that Thursday, Friday, kill the puts. What makes the put grass grow? bright red puts make the green grass grow. I'm trying to do an army thing with the stock market. And I'll be back with you guys in just a minute.
Biden says, I expect to meet with Xi Jinping in the near term.
Palantir, who on everybody else's chart looks bearish, looks like it's about to be a rocket ship and rip some faces off. Hourly trigger coming down on Palantir here. We'll see if we can get a nice fat roundabout move to the upside on PLTR. SPOO's coming back to check its hourly trigger here. We'll have that one little check above here. Remember, we always want the recheck trade. Remember back here, we failed. We're looking for what? We're looking for the squeeze above the hourly trigger, the test, and then the move higher. This is the major trade. This one right here is where the money is. Believe it or not, there's more money than any of this crap down here. Now you're looking for a multi-day trade to the upside. So we're looking to see if we can get that test and then boom to the upside right here. There's a big trade right here coming up. Keep your eyes on this one right here. Matter of fact, we'll make it nice and sexy for you. It's right there. Do you see it? You see the white is crossing the green right now? We want to see this right here. Watch this white line right here, okay? See this failure right here? We don't want to see that failure. Remember how violent they threw this down earlier today? They were like, slam, slam. See how this white line is above the green, right? It's above the green now. You now have a cross happening. And we're going to leave the sexy on so you can see this shit rip face. This is where you get a play here that is a monster move to the upside. PLTR bulls. Buckle up. No longer forming. That is a 3-trigger bull cluster. We're going to rip some faces off.
NYMEX diesel July futures settle at $2.46 a gallon. NYMEX natural gas July futures settle at $2.60. NYMEX gasoline July futures settle at $2.55 a gallon. NYMEX WTI crude August futures settle at $69.51 a barrel. That's down $3.02 or 4.16%.
Remember the rules. We'll come back and we will check the 6. We'll check the 27 EMA. This is a 1-minute chart right now. I'm going to show you the 5-minute chart here. You'll be checking this one all the way up. This yellow one right here. There's a 5-minute chart. You'll be checking this and running this the whole way up. This white line is about to cross right now on the 5-minute. And we should be on trend here for into tomorrow. There is some risk, just some heads up. There is some risk in the overnight because we're so fucking bullish. They might try to sell futures on you, but I am looking for a gap up. I'll be honest with you. I'm looking for a gap up Friday, Thursday into Friday. I'm looking for a gap up in the overnight. But there is some risk of dealers trying to counter that trade into tomorrow. You're going to be looking for a move higher into tomorrow's close. Keep your eyes on tech stocks. Anything that's been way oversold this week, anything that outperformed to the downside, keep your eyes on their zero dates. Well, they don't have zero dates, right? But surprise, surprise, we get some zero date action on Fridays. So if your favorite ticker got whacked this week a little bit more than it should have, or remember on last Sunday we did a show and I was like, yeah, some of those Fangmans need to come down more than others. Some of those Fangmans plus T should go up. Some of those Fangman plus T's won't come down too much. Anything that's gotten really hammered into today, keep your eyes on those tomorrow because they will have weeklies expiring. Those are their zero dates that got murdered all week long. So keep your eyes on those into tomorrow. So when we open the market tomorrow, we'll take a look at zero dates on any of these big tech companies that have gotten nailed into tomorrow. And see if there's zero dates. They'll probably be worthless. Bunch of bulls caught them, that kind of shit. And we'll run that shit straight up to the moon into tomorrow. So keep your eyes on tech for the outperformance into tomorrow. Maybe we'll trade. You guys want to trade tech tomorrow? We can do that. I was just talking to Winky in the background here a minute ago, and you know what we could do is I normally just trade S&P with a lot of you guys. Well, I think a lot of people watch me because they're trading tech. And they want the awareness of the S&P 500. Like, is the market healthy? You kind of need to watch both when you're trading tech. Tech is slightly more complicated, but we can trade it together if you want. Tomorrow we can trade zero dates on tech. And some of you guys that only trade tech, that don't know how to watch the market while you're trading tech, maybe this would be a good, tomorrow might be a good day to go over how to trade tech while watching the greater market to feel confident in tech. Be able to identify which tech Fangman plus T kind of shit is ready to run, which of it's oversold or overbought, which of it should blast off. Maybe we can do that tomorrow. That'd be kind of fun. Spend a Friday going over, if you're a tech trader, what you should always have open in the background to make sure that your trade is going to continue higher. For the outperformance, maybe you want to make extra money, that kind of stuff. And tomorrow we can do that tomorrow if you want. Well, I was talking to Winky about it. I don't normally do that in this show, but we can do that on the show. So we can do that if you like. Let me know in the chat. We could do that tomorrow. I did review some tickers with you this morning. I am watching in the background PLTR. I found Palantir fascinating yesterday. I had shown Winky like a traditional Palantir stock chart, and then I showed him the trigger with Palantir, and I was like, dude, this is a great time to be looking at all this stuff and comparing notes. Because I'm like, man, if I was a traditional stock, if I was like charting and shit, I'd be like really fucking bearish here. And I'm not really bearish here. I'm like very fucking bullish here. So the trigger's telling me to get bullish. It was telling me yesterday at the close to get bullish. So I know that years ago it would have been like, nah, I'm fucking super bearish here. So having that edge is important, right? Yeah, you got to have an edge as a trader. And if that's giving you the edge, we reviewed that this morning, right? I showed you how tech trapped bears, trapped sellers, trapped retail all the way up. And right now we're kind of witnessing that again, right? And so unless it proves itself otherwise. So I'm still watching PLTR in the background here. And there's a bunch of tickers that are like, they should be like fucking going to the depths of hell right now. And they're not. And the hourly is flattening on PLTR. So I want to keep watching PLTR and see if it reverses and goes to the upside here. And see if if you're like trying to test the edge, right? Do you have the edge over other people? So here we go. We're going to keep watching this into the close. And we're extremely bullish if you don't know that. At least on intraday and likely at least a day or two. I do want you to know also that the hourly is reversing course from its extremely bearish outlook into the close yesterday, and it is now looking extremely bullish. That could be a multi-day trade. Well, it was actually looking bullish yesterday into the close. But on a regular, you just like regular charting and shit, it looked extremely bearish. It should have to most people. So anyways, I'll be back with you in a minute. I got more stuff I got to do here.
This stream is sponsored by TickStrike. TickStrike allows you to actually hear order flow in futures, forex, and stock instruments. Get a free trial at tickstrike.com.
SMRT just keeps on grinding. Soon, still working on consolidation. SoFi chose the path of up. CRDO still plugging along. We said earlier not to take that trade unless it gets over $18.10. IoT still consolidating. Unity getting extremely bullish here. It's reversing a bear flag or a bear plane on itself right now. BRZE looking like it wants to explode to the upside. BRZE. ALGM consolidating still. GTLB cranking right now into its target above of 49.55. We'll see if this one right here can squeeze and go higher. There is risk of a rollover for more support to go up and trade 50.72. That's GitLab, by the way. P-Core fighting its way right now to try to. P-Core has a chance of squeezing. Just be aware that P-Core could squeeze here. And you see what the SPOOS is doing. Extreme bullishness right now on SPOOS, baby. Gap that shit up tomorrow, run it up, and we're going to run the fuck out of this. I guarantee it. Well, not guaranteed, but pretty likely here. We got a whole bunch of gaps up on high to close. We've got gaps tomorrow to close. We'll see how that goes. If you're out there in your hedge fund, close your fucking shorts between now and 4 p.m., please. I love you, by the way.
Brent crude futures settle at $74.14 a barrel, down $2.98 or 3.86%.
NQ is about to explode to the upside right now. We've got a bull cross on NDX right now on a 15-minute chart, swinging to the upside. Somebody go out there and find me a shovel so I can bury the fucking VIX. I want the VIX at $10. I'm going to tell you guys something out there. You might not know this, okay? If you're trying to buy a fucking bottom, right, you want the setup? This is the setup. This is the setup. This is the jam. This is what makes that peanut butter taste good. This is the one that pays the bills. This is the one that rips faces off. This is the one where you go in and you go, give me some fucking 0 dates, print me 20K. That's what this is. This isn't we're just buying randomly. This is what it's all based on right here. New high on the SPY. Where's my fucking Bulltown music? I gotta get some jams out here. The hedge fund out there right now, and he's like, I don't want to turn it off. And the boss is like, I want to keep it on. I want to keep the hedge on. The boss is like, you'll get your revenge on Captain Jim James later, I promise. But it ain't today. This is where we're going to grind and we're going to rip some faces off. Yeah, you guys are like, we're going to gap up. What is it, 256? Are we go? Let me know in the chat. Why don't you tell me in the chat? Are we getting power hour or sour hour? Why don't you let me know in the chat? I'd love to know what you think we're doing. I want to know where the stream is right now. Are you on power hour or are you in wimpy hour? What do you think I'm on here? Power hour or sour hour? What do we got above us? Ooh. 438.08, huh? Ooh. Got some guys like, shut it down, Danny. Just shut it down. SPOO's trading 436.29, new high. 3 minutes left. They got the new high. We've got 3 more bars left in the 1 minute chart for the SPOO's. What is SPY doing right here? Let's rip some faces off. Oh, yeah. Grind them all out. Sell your fucking puts. Close your fucking shorts. Make me some fucking money right now. Had some bad trades this week. I need more. Trading 436.33 right now. 436.41 right now. Slap the fuck out of it up there for me. Whoa, 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 whoa. Watching this shit here. Just keep on grinding, baby. Get on up there. There's your 3 trigger bull cluster. You have the 5 minute now. Crossing the hourly trigger. You got the 1 minute. Cranking on it. We're in a 1 minute chart right now. Here comes the 5, baby. Crossing the hour HT right now. Slapping R1. Can we get some return to the scene of the crime? Can we get 436.98, 437.60? What's that right there? Is that a gap up there? The fuck is that going on up there? What the hell is that right there? Is that a gap? What is that? You left a gap behind? How in the fuck did you leave that back there, you dirty dogs? We're coming for that right there. Gonna close that gap out up there. We're not done. Not done. We got Friday left. Right? We got one more day on this shit. We have another day here, right? Oh, yeah. Somebody call an ambulance, but not for me. Somebody call me a wambulance. Somebody call me a wambulance. We got a crime scene we gotta go take care of. I gotta cue up my music here. Which jams am I playing? Let me see. Back to the Future, Ya, Rinse and Repeat, Digifunk, Ya Ribbon Man. That's Jammy Jams. Jammy Jams. Sounds like Jimmy Jams, right? Yeah, we could start with this one. Let's start with this one. We'll start down here. Should we? No, wait. Yeah, should we start down here? We'll start down here for right now. Start with this bad boy. Play it. Right now. Bulls have 15 minutes to get a new high right now. Thirteen minutes left. like those tracks. Like those tracks. In reverse, though. The revenge sound the last 2 days, right? Right into this bell. Remember that last hour, flinch hour? Come after him every day. I gotta make a T-shirt that's like, do you short the S&P 500 because you don't like it? No, I short it because I hate Captain Jim James. The crazy part too is I'm still paying for music. I should go to that site and just take the hits on the let's just take the hits on the music and get the copyright strike, and maybe I'll just write something inside the description of the videos. So I don't maybe that'll work by not taking the hits. Look into that today. Write that down. See if I can just write the stuff from the music that I actually still pay for right now. Music and description. Then we get some better jams. And mix it up a little bit. Hourly turning up right now. Big old green swoosh coming up from down below. I want you guys to see it so you guys can see what I can see. You guys probably don't know what I can see versus what you can see here. You guys are probably wondering what the hell's going on. Probably all panicking out there. Let's see what Captain Jim sees. Probably not what you see, huh? Not for long. You guys are gonna see what I see. Oh yeah, babies. Look at that. Oof. That gorgeous. You want to see it? See that green line right there, baby? That's trend. What's that trend doing? Trend rolling right around, and it's curling right up right there. It's gonna happen tomorrow, baby. Yeehaw. Got it right there. Just hauling ass right there. You know what happens when that happens? You want to see? Want to see what happens when price gets over there? Boom. Look at that shark down there. See it right there? They're all out there panicked right now. Right up. Bam, bam, bam. trend shift right now. I can go over there. A bunch of fucking calls for fucking tomorrow. Hold on here. I'll turn that down. I think I just played that twice. Can't find anything else to play. Yeah, I don't like that song. I gotta get some new songs tonight. It's on my list. Oh yeah, we're on it. Like we're not going down. If you're sell side, you're fucked. I guarantee it. I have like an 85% chance of fucking ripping some faces off here. I'll just fucking play this music right to 4 fucking p.m. because I know I'm right. You watching that Curl Winky on the HT, baby? You know, my favorite thing, Winky, is I make those posts on FinTwit, and I'm like, I'm just going to put that three trigger bull cluster, and then I come back 3 days later. People are like, what the fuck? And I'm like, that's right. And it's just like fucking burr. Thanks, Uncle JBJ. Yeah, I've got some. Let me see if I can find it right now. See if I can. Let me check and see if I can find it right now. See if I can jump on it right now and see if I can get some of that music. Hold on. We can do it right now, I think. I think I can. Let me see here. Launch dashboard. Let me see if I can pull some of it up right now. I hope I don't have to restart. Give me a second here. I got to check on. I was using Pretzel at one time. But the people are getting nailed on it. I wrote, I would give negative stars if I could. If you have any kind of following that's musical trigger demonetization, do not use. Hold on here. Another one here. Wait a minute. Music. There's another one called Slipstream. I think I got pinged on this one too. Let me see what this one's got. 100,000 songs. Let me look for ratings on it. See if people get pinged on this one. They're not showing the ratings any longer. That's probably not good. Last updated June 2023. Let me look here. Let's see, install. I hope this doesn't kick me off streaming right now. Successfully added to app navigation bar on the left-hand side. I don't see it. I might have to like stop the stream and start it again. Let me see. What's it called again? Slipstream? Settings. Nope. Not settings. Can I reset without stopping the stream? Yeah, I don't know if I can. Apps Manager. Open. I don't see it here. Open. It's not opening. It's like no. I think I have to restart the entire thing to play these jams. You know what we could do is just say fuck it and play some music and we'll just lose the money for today. Should we do that? Let me see here. Oh, wait a minute. Nope, no, it's not doing it. I bet I have to restart everything. Maybe I'll just play some jams here. And get pinged from the gods. Hold on here. How do I go back to the stream? I'm not on stream anymore. I'm like kind of in this weird place. How about the dashboard? Where's the dashboard? Uh-oh. Oh, I'm fucking this up. I'm gonna lose the stream, I think. If I lose you guys, I'm trying not to lose you guys. Hold on here. Let me see here. I'm fucking this up. Dashboard, home. Nope, I don't want to go there either. Fucking Streamlabs, man. I fucking hate some Streamlabs sometimes. What am I looking for? No, I don't want that. No, I don't want that. Let me see. No, I don't want to log out. What am I fucking pressing wrong here? Yeah, I'm in studio mode. Studio mode. No, what the fuck is going on here? There we go. I'm back. Okay, I'm good. Whew. I thought I almost lost us there. Hold on one second. I'm going to try to put some music up. What do I got there? I don't know what this is right here. I gotta try to find this fucking music. App Manager. Open. I don't know what I'm doing here. I can't see shit. It's like a black screen. I got like a black screen in front of me, like, and then I don't see anything on Streamlabs right now. How do I go back? Studio mode. Nope, not studio mode. Not seen either. How did I just go back there a minute ago? Are you guys all scared in here? I can see the chart here right now. Are you guys scared of where we are right now? You're all panicky? I'm not panicky. Dude, what is going on here? Are you guys all scared? You guys all in full panic mode? I know how this goes. We start with you panicking, and then we end up with you wanting to buy calls when we're at the top. I know how this goes. See, dashboard, highlighter, creator. What the fuck am I supposed to be on here? I don't know what I'm doing here. I'm going to start at the top and click them all. There we go. Okay, I can see again. So you guys panicking right here? You guys all like worried? You're all worried walruses? Are they getting this? Are they getting the scare on you that this is the roll? Is that what they're telling you? This is the roll? More crash to come? Is this the doom trade right here? The crash trade? Like that? Is that the fair trade right there? I'm long calls here. I'm long calls into tomorrow, and I'm long calls for a gap up overnight. And I don't believe any of this right now. Got no faith in this right here. 0. 3 trigger bull cluster initiated. We're going up. Now I guess I could get bearish here. If we had a close below the cluster, I would. If price was below the hourly, I would reverse my decision and go with puts on it tomorrow. But we're above it right now, so we're good. I guess that would be the only way that I would get bearish here. I guess I could get bearish here. I wouldn't rule it out. Wouldn't rule it out. Let me make sure I got the exact target here. 435.61. It's right here. It's right there. What-a-do-do. I wouldn't rule it out if it was like bloodbath down here and then some rejection. Probably take a short there, but I know what this is, so. I wish I could show this to the green, like when the green is going down and when the green is going sideways and when the green is coming back up and what that actually means. So that's where you are right now. Initial, oh, wait a minute, you guys can't see that. So what you're not seeing here is we had like the green bar was like coming down and the green bar went sideways. Price came up, jumped above it. And now the green bar is coming up right here. So it's like right here, wham, and then wham to the upside. And this green thing determines trend. And so you see the flattening. When you see the flattening, it's telling you that this is the bottom. And then you're waiting for that confirmation for the turn to the upside. Here, I'll show it to you guys one more time here so you can see it. And matter of fact, you can see it on, you can see it right now. See this right here? This is support right here for the SPOOs. So I can scrape this up for you. See that right there? This is your support right here for the SPOOs. That's your hourly trigger right there. And I'm going to show it to you here. Another way to show it to you. This is a 30-minute chart. So you guys are watching a like 1-minute chart, 5-minute chart or something like that. I'm going to show you a 30-minute chart. I mean, to see what happens. You have that downside move, right? They're like panicking you, they're panicking you, they're panicking you, they're panicking you. Break above. See that flattening there? You see that down move right there, then the flatten, right? So every time you see that flattening like that, you start to get fearful, right? You're like, bloodbath, bloodbath, bloodbath. Then you see the flattening. See the green is flattening right there? And what you're seeing here is trend. See the flattening right there? I want you to show you the flattening right here. See the flattening that's taking place right here? And price is now above. So just right here. Price now above. This is going to start to push up higher. You're going to get that confirmation trade to the upside. And we'll keep on moving to the upside. Now let's say we're testing. Say we're testing this and the green line was down here. And let's pretend none of this was here. Let's get rid of all that there. Pretend none of that was there. And the green bar was still heading down. Ah, shit. And you got the red bars here, right? You'd expect that more continuation down for SPOOs. But when you're getting it here, where the flattening is happening, right? This gives you the foresight that we're coming into a bottom when the green is flattening here. And the other thing that's showing you is one more thing down here, which is velocity. When velocity is down like this, right? It's looking to make this move to the 0 line and then move up, right? For that push higher. Now, daily is kind of shitty here. So that's why I'm wondering about into the end of month. Do we get that pullback down to the 432 for the SPX?
776 million to the buy side.
They're trying to sell it right now. Look at them. They're like revenge trading this. Look at how angry they are. Like full anger into this close. Rage right now on this close. On this close right now. They're pissed off. But I'm still long in tomorrow. I don't believe these sellers right now at all. I've got no faith in these sellers. Zero faith in these sellers. Pissed off sellers. But this flattening right here is telling you the different story. And this flattening is different than this one right here with the downside. You've got this flattening right here. So I'm not buying any of these sellers right now. I don't believe anything that they're saying to you. Probably freaking you out right now. And I've got no faith in them. So here we go. Look at NDX. We'll look at Qs really quick. See if it's the same thing. You're seeing the same thing right here. The turn's already been made. You see the turn right here on the Qs to the upside. And so they're trying to panic sell you into the Qs as well. And the Qs are just fine. They're going up. And you've already seen the turn's been made on the Qs. So you're probably panicking right now on SPY. It's just not going to happen. Take a look at IWM. Got the same thing happening right here, right? Not quite there yet. Not quite there for SPOOs, but look at IWM coming from down below right here. So you're probably panicking on IWM as well. And it hasn't become bullish yet, but it's going to turn at some point on Friday and start moving higher. You're going to get one more day in here, and you're going to get that explosive move on IWM. So don't be believing these bears. We believe in these sellers telling you that we're going down. I don't believe any of this that they're doing right now. None of it. It's all scam right here. Don't be believing it. Do not believe them. Or at least I don't believe them. I don't believe anything they're doing here. They're going to try, and I'm telling you right now, they're fucking wrong. They're trying. They're revenge trading all they want to revenge trade. They can revenge trade this all they want. This price means nothing to me tomorrow. What they want to do is they want to try to sell SPY into this bell so they can get some help to the downside for dealers trying to sell futures. But I'm looking at Qs right now, and Qs are looking just fine to the upside. So I'm not believing it in any way, shape, or form. This is a bear trap. Yeah, I can look at BTC if you want me to. 1 second. BTC on its hourly right now. It's still sitting on it. It got a dip buy on, or excuse me. Hold on 1 second here. Yeah, so BTC had a dip buy on 29.83, and that's saying the same thing. I'll show you BTC right now. There's a little bit of Bitcoin has a little bit of weakness to it. Let's look at Bitcoin really quick. Bitcoin might have a trap on it. Be careful on Bitcoin right now. It looks like it wants to explode to the upside, but I never like seeing the hourly rolling like this. So Bitcoin could have a trap. Let me look on Bitcoin real quick. Or it just stays fucking... I'll say two things about Bitcoin. It can stay irrational longer. We can get more green bars up here. I'm bullish on Bitcoin right where we are. As long as we stay above 29,909, I'm bullish here on Bitcoin. But it's if we break 2902, be wary. We can trade all the way down to 2,800. But there's nothing saying we can't have like a double. Like here's a point right here. We roll over to zero line, then come back up. So I'm still with you on that trade to the upside. $31.03.04.05. That's your next stop up here, or it's right before. It's right here. 30 target above 30724. The cool part about Bitcoin is you got some craziness coming. Yeah, you break above this. If you start breaking above this 30,000, this 30,072, and more specifically, you're going to expect volatility in here. Between 37.24 and 32.285, you're going to expect volatility in here. But then you're just going to start fucking cranking. So it's something like this. And then a power move up on Bitcoin. Some consolidation between. Is that consolidation? You're wearing out some of this vol in here. Key points here on, you've got a coil going on here. The key point that I want to say to you is price must stay above. So like price must, for continuation, price must stay above.
This stream is sponsored by To The Tick.
Must stay above
Fibonacci and market profile levels by signing up at tothetick.com.
29,911. If it doesn't, you will have a pullback. But your pullback will be a buy. Just to let it cool off a little bit in here. And then you're going to go up there and attack that one up there. I'm very bullish on Bitcoin right now. Extremely bullish. And you've got daily coming for you. You got weekly coming for you. So even I don't think you're going to get this dip buy down here. But you might get it end of month. Maybe July you might grab that. But as of right now, it continues to hold itself. And you see that holding itself up here. Demand is still here on hourly trigger. And they want to break above that 30,000. This one right here is high vol. There's a lot of volatility in here. You're gonna experience some volatility. Did I spell that right? You're gonna grind around in here. They're not gonna want you to get above there on Bitcoin. Let's check out the SPY real quick. Yeah, see, we're buying it again. See, these fucking bears, man, they don't fucking know when to quit. You see these guys down here? These fucking bears, I'm telling you right now, this is not bearish. We are fucking bullish as fuck right now. I assure you. No selling in here. I give a flying fuck about any noise right now in the SPY complex right now. We're going to the fucking moon. And, well, not the moon. We're going to go up here and go to the return of the scene of crime up here. So, like, all these, like, 1 minute, 5 minute charts you're looking at mean shit. Like, this is going sky high right here. And you can see it on the Qs. All that drama for the last 5 minutes, 338, right? All that fucking drama for nothing. And I'm going to tell you something. Qs outperform, but the Qs trade with the SPY. So if the Qs are going up, the SPY is going up. You ain't seeing Qs go up and fucking SPYs shit the bed or any of that kind of stuff. So right in here is one of your proofs. You guys hear me talk about NDX all the time in the background. And what is happening right now? Oh, I thought we were crashing. I thought we were fucking crashing here. I thought we were in the middle of a crash or something. All bullshit. All scams. Moon mission. And I'll hold that until tomorrow's fucking close. So you come back and you check this in 2 days, 3 days, and you tell me if I'm wrong. We're about to fucking moon. I love this, huh? Like whiny bitch hedge fund shit. Get the fuck out of here. We're going up, bro. We're not going down. Let's see how we close this day. PT2. Close me on that PT2, baby. Right there. Matter of fact, got me up overnight right there. Fucking smoking crack thinking that's fucking happening. Smoking crack. All right. I'll stay with you guys right now. I got to do some work, though. I'll keep the mic on. I got something I got to do, man. Like, you guys don't understand. Like, after the show, I work until, like, 11 or 12 at night. And, like, you guys see what I'm doing here on stream, but you have no idea what I'm doing in the background. And it's, like, it's wearing on me. It's, like, 12-hour days. It never ends. So I got to do some work while we're here into this close. I will be here with you. I'm going to put some jams on. We're going to watch this close right now. You're going to expect a big move to the upside. Do not be buying anything these fucking sellers are telling you. We are going up, not down, up. I promise you, 100 fucking %. Well, it's like a 90% chance. It's like a 90% chance. Like 9 out of 10 times. One time we won't. And they can do whatever they want over here. They can try to scream it as loud as they want. They can try to say whatever they want. It's like literally like 9 out of 10 times they're wrong. 9 out of 10. Okay, I got to do some shit. Maybe I can get you guys help in the. Well, I need somebody's help. I probably got to have to ask the admins in. Probably got to ask the admins inside of Discord. Because for some reason, I am fucking sucking at doing webhooks right now. I don't know why I'm sucking on webhooks. Normally I'm good at them. Right now, on like the Discord webhook, and I used to be great at webhooks. For some reason, I'm not good at this one. What am I looking for here? Oh, shit. Hey, I got to make a phone call. Give me 1 second. Croissant, are you out there? Remember when I called you the other day and I said, Croissant, remember the other day when I called you and I said, hey, I said, I'll trade $1,000 with you. You ready? You ready for the trade, brother? I got your first trade from your trading versus my trading. You ready? Got your first trade for you. I'm buying. Ready? Croissant, this is the trade. You ready? Buy $1,000. $1,000. You ready? $1,000 on 438s. Hold on a second here, brother. I got a trade for you. Oh yeah, 438. You ready? $1,000. 438C for tomorrow, June 23rd. There's your trade, Croissant. Did you guys hear me say that out there, or am I talking to myself? Did anybody hear me out there in stream when I said that? Croissant, here's your trade.
US
Ready?
Treasury yield rose
438C for tomorrow.
percentage points to 3.872%, the largest one-day yield gain.
Croissant, we had a conversation on phone. I spent time with you. Fucking paper trade it if you have to. I don't care. Told you I'd do 10 trades with you, right?
Close imbalance still sitting at 770.
Fucking mark it on a piece of paper, get in the options chain, see what it costs right now. And you get me, I'll tell you when I'm going to fucking sell it, okay? So there you go.
Market on close imbalance, currently sitting at 3.5 billion to the buy side. Just waiting for the final orders before we call it. Market on close imbalance, 3.5 billion to the buy side.
Hey, Croissant, I just sent you an email, man. So if you want to respond to it. So if you're out there right now, Croissant, send an email. I just sent you an email. Come on, do it for daddy. All these bears don't want to give it up into the close. They know they have to give it up. They know they're not gonna win here. I don't care how long it takes. They know they can't win. They know they have to close their shorts. You know and I know. You know and I know where this is going, and I know that you know that I know where this is going. I know you're wrong. I know I win. I know I get paid. No matter what you say. Take off your market hedge and print me my shit into Friday. Trading 436.31. Last 6 minutes of the bell. 438 C's trading 44 cents right now into the close. You probably take the money off after the bell and jump right back in for Friday. Trading 44 cents on 438 C's right now. 45 cents right now. Give me that fucking P2 up there. Lying to these traders and telling them we're going down. Now trading 45 cents. They were 36 cents earlier. Come on, baby. Show me the way. You know you lose. Give me the money, dealers. I got you by the balls tomorrow. I got your ass. Look at them. They're all cranky pants. All stinky Pete's in here. I got your ass. We're going up, baby. Can do all you want on these candles. I don't care. They're revenge trading it. Look at them. Slam, slam. Doom, doom, doom. Look at them, dude, just trying right now. Their best. They're like, I'm fucked upside down, man. I've been short for the last 3 months. You know what the craziest part is? You know what the craziest part of this is right here? It's probably like a Carl Icahn or something. And this guy's been short since like right in here. And he's probably like, I shit you not. Like they're up here and they're like, I need to just get down here so I can get long with all of you. It really is something fucking stupid. You'll see some of these people, they'll come out and tell you they lost $6 billion. It really is like somebody with like bank. They're just like, fuck you, max puts, or not max puts, but you know, max leverage short. We'll blow up the fund. Absolute rage. You got Mike Wilson out there with his own personal account just slamming the sell button. You don't think that shit happens, but it does. They're like, we don't do that. We take the other side of the trade. I'm like, you fucking liar. They blow up. That's how Melvin Capital blew up. You get the internal text messages and you find out they were fucking around. They were lying. Here's the 5-minute chart on the SPOOs. Trading for a gap up overnight. Give me that fucking gap up in a Friday. Print me some 438s tomorrow. Print me that P2, PT2, PT3, Pit me R2 tomorrow. Return to the scene of the crime. You ain't getting away with it, sellers. You're not getting away with it. Wrong side. Wrong way, sellers. Yeah, I just sent you an email, Anthony. If you can ping me back. I'm trying to get your Discord DMs. I'm gonna DM you in Discord. You got like Carl Icahns just like slamming the sell button. You're getting 10 trades from me, I told you, right? In that long phone call we had. Here's trade number fucking 1, brother. That was last week on Thursday, right? I said I'll make 10 trades with you. So I got my trades for you. Here's my number 1. We'll do it live. We'll make 10 trades live. $10 trades. Trading 46 cents, 47 cents right now. Up 25% on the first trade with Croissant. 48 cents right now. Blast them. So I came out and started blasting. 49 cents right now. 49. Croissant, you want me to close that trade? You want to take the money and run? What do you want to do? You want a diamond hand? Talk to me, Goose. Here's trade number 1. Trading 48 cents, 49 cents. You want a diamond? You want to make some money, brother? I'll make some fucking money. Trading 48 cents. 49 cents. Give me the fucking money to the bill. Give me the fucking money. Give me all of it. 51 cents into the bell. You want to take it off or do you want to keep it till tomorrow? You want to turn it into 200 or 300% in one trade, trade number 1? Then we're going to do is we're going to go back in with only 25%. 50 cents right now. After the bell, 50 cents. What are we doing, croissant? Fucking trapping sellers. 51 cents after the bell. We're after the bell right now. Now they're going up in value right now. You ready? You ready for the after the bell move? Trading 52 cents right now. 52 cents on 438C. 53 cents on 438C. 54 cents on 438C. 54 cents on a 36-cent trade. We're not even fucking done here, are we? Day's not even over yet. Another 15 minutes. Do you want to take the money and run now? What do you want to do? What do you want to do? There's your first trade. I'm going to hand the trade off to you now, okay? So here's my first trade for you.
China to boost.
Number one, 36 cents. Now trading 51 cents. Personally, I would pull the money off the table here. And I would reset myself in the morning. I would go back and buy another cheap trade, right? I would take some off, take that money off the table, and I'd go in with a little bit less money. So let's say right now I'm up. How much am I up right now? $600-700? Something like that, right? How much am I up right now? 51 cents it was at just a minute ago. So 36 to 51, figure that out, whatever the fuck that is. And then take that shit off the table, and let's start back at, we won't go with 1,000 again. Well, now we'll go with less. We'll use the money that we made for a second trade tomorrow. Now, if you want to stay in this trade until tomorrow, like, fuck that, I'm here to make some money. We can do that. I'm expecting a gap up tomorrow. Expecting a trend day to the upside for the spoos. Maybe you take, I don't know, $500 off right now. Leave some runners on. 25% or so for that big old gap tomorrow. Right now, 438C is trading 48 cents. Hopefully tomorrow we can get that giant fucking gap up and turn the first trade into 200%, 300%. And I'll let you know my second trade. That's number one. So I got one trade down, winner. Big fat fucking W. And I got 9 more left, right? We'll do this. We'll run this shit live. I got 9 more trades. We'll see if a trader can get 10 straight trades with wins on that. 10 straight trade winners. We talked about this about a week ago. We had a private conversation. The guy's awesome, so I was talking to him behind the scenes, and I'm like, look, I was like, you got to fucking start winning, man. I was like, I'll take 10 trades with you. I was like, 10 fucking trades. And they'll all be winners. Well, most of them will be winners. We'll manage the money, too, like take some off the table, come back in with a little bit less, you renegotiate the trades. It might take some time. Could take us. So this was a week ago. That was my first trade. So we'll take 10 in a row, and we'll rebuild your account for you, because I feel bad for you. So there's just start of your rebuilding right there. 438s trading 49 cents right now. That's 4:03. We still have 15 minutes left. I love you too, brother. We're here, right here, man. We're doing it live, baby. Yeah, you're probably. I'm gonna be honest with you, croissants. I'm gonna be honest with you. You're probably going to get a counseling phone call from them. I've been there. So I have lost a lot of money, and I have had the phone call. So you're likely going to get an email, and you're likely going to get a phone call, and they're going to probably not want to talk to you right away. They might lock your account, and then they're going to have a meeting with you, and they're going to tell you to stop fucking trading. That's what they're going to tell you. They're going to tell you you're out of your mind. They're going to say, put it in an interest-bearing account, use that interest to trade. Learn how to trade first. But that's okay. We're going to take 10 trades together. It's hard work, but you're going to get there, I promise. I promise you'll get there. You can recover. I promise you can recover. Make you a winning trader, I promise. Right now, 438C is trading 50 cents. Can we get like 55? Can I get a fucking gap in the last 15 minutes here? Can I just grab all that shit up there right now? Can you give me the PT2 by 415? I promised it to everybody today. So, all right. So here we go. I will see all of you guys tomorrow at 9:30. Dude, I got to apologize to you guys. I know I want to say something to whoever's still here right now. I got to say something to you guys. Every day in the stock market is like a soap opera. There's never a good day for me to do this work. We could sit here. It's like doing drugs or something. Like you come into the market and every day there's always a fucking story. So I know that these days right now this week, you're like, why is he doing this? Why is he not here? Dude, we got to do it because if we get it done in this week, we don't ever have to do it again. So I know in chat, you guys are like, why is he doing this? Why is he doing all this other stuff? I do so much shit outside of this live stream for us that I got to get some of this stuff done during the fucking day. And I know that you don't want to see it happen, but it's going to happen. So you're going to expect more of the same of this tomorrow from me in the stream. The stream will be up. I'll be here working, but I got to get this shit done. I can have a choice, okay? So I'll see you guys tomorrow. I'm looking for the fucking gap up tomorrow. We are trading in a new zone. No matter what anybody else tells you out there, we are fucking trading. I showed you the zone earlier. You saw it earlier here. Boom. We're above. You see it? Let me see if I can mute this. No matter what anyone out there tells you, we are now trading right back into this zone right here, looking to return to the scene of the fucking crime. I don't know if it takes overnight. I don't care if they try to do this bullshit tomorrow when they go up that way. If you want to like exit your calls and wait for that, if you're looking for the straight gap up overnight to get up there, you think PCE is going to send us bloodbath to the depths of hell, that's fine. It's 407. You want to take your money and run? I have no problem with taking the money and run. None. I don't, dude, 10%, 20%, 30%, 40%, 50%. You want to take the money and be like, I'm gonna go flat until tomorrow, Cap? I get that. If we get the gap up tomorrow and we come back down for the rest of it, we can do that too tomorrow. You're afraid of PCE and just want to take the money and run? No problem. Trade it all again tomorrow. But I tell you what, I'm going to tell you something. We are fucking trading this shit right here tomorrow. Okay? We are trading that shit tomorrow. I will see you guys at 9:30. Buyers in the house. Sellers are going to tell you that it's a relief rally and that they're just repositioning. I'm telling you right now that we are going to try to attack some highs up here, close some of these gaps, all that kind of shit. Probably come back, drift back down into the end of the month. Maybe we got to maybe close this stuff, like a failure up here or something. Then we drift back down to that JPM collar down there, end of month, something like that. You have like one big day of volatility. Then we come back up into the end of month, like that Friday we'll get a face ripper. And we'll just blast off into July 5th, and we'll come back all fat and happy and rich on July 5th. I'll see you guys tomorrow. Look at that fucking move right there. Hell yeah, Bulls. Good job. Woo-hoo. Woo-hoo. Buyers.